All right, guys. Good morning or good evening. I'm so used to saying good morning. What's up, team? Hope you guys are doing well today. Today is Apple earnings. We also have Amazon earnings coming out today. It should be very, very interesting for stocks. Apple and Amazon are two behemoth companies. They're both down on the day so far today, and we'll see if they continue down after their earnings report. As we always do, we're going to get here. Let's try some different music here today, man. I've been listening to the same stuff for like a minute. So let me try some different music. Let me know if you guys can hear it. We should be going live pretty soon. Hey, what's up, Adele? Free? What's up, man? Can y'all hear the music? You got Amazon on the left, Apple on the right. I don't know if my headphones are going out. They might be. Maybe I got too much gunk in them. All right, guys. But yeah, so Apple down to 144.50s here. We're going to get ready to do a poll. And so, yeah, let me know what you guys think about Apple here. If you guys are buying Apple or if you guys are just going to wait. I did end up cutting my Meta trade this morning. If you guys remember, we did cut Meta this morning. Buying Amazon too. I'm in Meta now, below 100. Let's effing go. Yeah, hey, good luck, man. Hey, what's up, Break? Hey, all good, man. Okay, we do have Amazon earnings too today, man. It'll be interesting. The Apple on the right here is at 144.30s. Break it down, man. My headphones are just not working that great. Can y'all hear the music? How's the music? Is it too loud? Is it not loud enough? How's the music? Is it too loud? Stock of the day, SLNA, running up. Look at Amazon here. Y'all do me a favor while you're here. Hit that subscribe. Wait, did they take away my ability to do polls? Where's my polls? Okay, got you. Ooh, we got a Q&A. Oh, that's pretty cool, man. YouTube added this Q&A feature, man. That's actually pretty nice. Anyways, we're still gonna do our Apple poll, bullish or bearish on Apple stock Q4 earnings report and call. Let us know in chat if you're bull or bear. Let's vote on the poll if you want as well. They also have a Q&A option. Music's a little low. Can y'all hear it? Let me know. We're also going to do our Twitter poll as we always do. All right, guys, Apple down to 144. Are y'all buying this dip? Is my question. Yeah, guys, let me know what you guys are doing here. We got Amazon earnings too here, which would be really interesting. Again, we're going to do calls or puts on Twitter. If you want to vote whether you want to buy calls or puts on it today, let me know. We got the poll live here as well. If you want to vote on that poll, we'll post this link. Also, join our mailing list. Amazon is up a little bit. In the last like 10 minutes. Yeah, we're not going to beg people for money here, bro. If you're buying any dips, only very short term because you'll be catching a falling knife. This is a bear market, 100%. I never hold them super long. I mean, I'll hold them. It depends on how long. It depends on what stock it is, right? Like Disney, I'll hold long term. I don't care. But when I mean long term, like if it really got to that level, I'd hold it for like a couple years, you know. All right. We also looking at our Twitter poll here, man. We got some really interesting reactions here. We've got 10 votes already on our Twitter poll. 10 in less than like 30 seconds. And all of them are for put options. So everybody's short biased here. A lot of people are short biased. Again, let me know what you guys are doing. If you're holding anything here. Amazon popping up a little bit. Apple all the way down to 144.50s. Yeah, I mean, I don't think it's really smart to take any sizable position ahead of this. I think most of the time the market is going to end up just kind of, doing its own thing a lot of the time. And people that take big polarized positions now are usually just going to end up getting themselves in trouble. What I would do is wait to see if we get a big overreaction from whatever earnings that show up, and then maybe take the opposing trade is what I like to do with these moves. Again, let me know what you guys like. Again, we got about 20% calls, 80% puts on our poll. Got a bunch of votes already. Amazon up to 111.20s, 111.20s. Follow the smart money. I'll wait for a huge jump in the NASDAQ futures and then short it on the first quiver of hesitation. Hey, do you, bro? Apple been down most of the day. Yeah, for sure. It's down pretty big red day for it so far. Hey, what's up, Daniel? Looking at our YouTube polls here, we did get some YouTube polls. We got 59 votes, 37% are bullish, 63% are bearish in the last 5 minutes. So, yeah, Fed meeting is going to be crazy, bro. Remember, the Fed meeting is next Wednesday. Next Wednesday is the Fed meeting, so. So according to Bulldog Trading, Zuckerberg's wealth has shrunk by 100 billion from its peak 1 year ago. The biggest wealth loss by one person in history. 100 billion. Is Jim Cramer crying? And issuing a public apology about being wrong about Meta? Bro, I bought the Meta dip and I was wrong and I didn't cry about it. Bro, I ended up losing like 120 bucks on that trade though. So it's like, Jim Cramer seems like he had a much larger position. Is he crying? All right, I'm gonna share this on my Twitter page. If you guys want to see what I'm talking about, I'm gonna post my Twitter link in chat. Give me a follow on Twitter if you haven't already. I certainly appreciate it if you can. Hit that follow button on my Twitter. But tell me if you see Jim Cramer crying. I can't really listen to it on the sound. I just shared it on my Twitter page. There's my Twitter link right there. It's twitter.com/beginner trades. Check it out. Let me know if you see him crying. I can't tell. Why do you think the Fed meeting is going to be crazy? Well, because the market has been kind of crazy the last 3 months. Highly influential is the Fed meeting. The Fed press conference and the rate hike decision before that is going to probably influence markets the most out of anything, except for maybe arguably CPI might influence the market more. But the two biggest economic fundamental catalysts that generally drop and influence the market is the CPI report, so inflationary data right now, and the FOMC rate hike decision. And so next Wednesday is the biggest stock market day really of the last couple months. It happens every 6 weeks. It's incredibly important and influential over stock price and movement. And we're going to stream it live here as we always do. But yeah, it's going to be big. It'll be interesting for sure. There you are, Bulldog. What's up, man? Yeah, I'm looking at you. What you posted on Twitter, bro, about Cramer. My guy's crying over there, dude. Oh, I kind of feel bad for Cramer. He looks upset. I think the heat's getting to him a little bit, bro. I'll tell you this: it's hard to be out there and put yourself in the public sphere, and have people just kind of talk smack constantly to you. It's hard, man. I mean, you make good money doing it, and so I don't feel that bad for Cramer. But I mean, Cramer's a stock market staple, bro. As much as smack as I talk about Cramer, I don't know. But yeah, I don't want to see him crying on TV. That's for sure. Hey, thank you, Renew. Hey, I appreciate it, man. Everyone already expects 75 basis point hike. There's no reason for any big reaction, right? I think that's kind of naive thinking. Just because everybody expects one specific thing means that if we show anything outside of that range, then we might even have a larger reaction to it. It's not always exactly what the market. It's kind of like earnings, right? A company can expect whatever for earnings, right? But the more that people expect one specific thing, and the larger the knee-jerk reaction we get if it's not that specific thing. And so sure, everybody expects 75 basis points, but if we show 100, the market's going to essentially do a little mini crash on Wednesday. If we show 50, the market's going to fly up. Because 75 basis points is already so baked into the current market already. And so you don't want to be short-sighted with it. It's certainly going to be a very important day in terms of the stock market, and it's something that we should all pay attention to next Wednesday. The Apple report's not out yet. It comes out at 4 p.m. Eastern Standard Time. What did the guy next to him say? Here, I'm gonna mute the music for a second. I gotta see this. I want to see what Cramer's talking about over here. It's not that long. Cramer's crying. He's actually crying, bro. Oh man. Go check it out on my Twitter at Beginner Trades. Wow, man. His voice cracked and everything. He's crying, dude. Poor guy, man. I got a soft spot for Cramer, bro. Man. Kramer shook. Man, wow, that's surprising, bro. Like Kramer is legitimately on the news, cracking. His voice is cracking. You can tell he's starting to kind of get worked up. Um, yeah, man. Hey, I hope he's okay, man. I don't have any ill will towards anybody, bro. Man. Yeah, I mean, mornings are busy, bro. I'm not gonna catch everything in chat, dude. Uh, yeah, it's been a good bull month. Meta's starting to rebound back as well. Meta back up to $98. I kind of feel bad for Kramer, bro. I mean, it's his own money. I don't think it's. Listen, I'll put it this way: Kramer's not crying because he lost money. All right, Kramer is crying because he fears about. He has credibility fears, like fears regarding his credibility. Like that's why he's crying up on the news. Okay, he is. It's not about money. Hey, here, no, don't let her in here, baby. Look, get her out of here. Like she. All right.
I gotta go pick the kids up.
Okay. Yeah. All right. But yeah, like I said, Kramer's crying right now because his credibility is hurt. Because they've got the whole thing about the inverse Kramer ETF in Page, and people are attacking Kramer's picks, and Kramer, you know, this is a blow to his credibility, and he understands that, and that's what he's ultimately crying about on Twitter, on CNBC. Now, I feel for him. I truly feel for him. Is this Christmas music playing in the background, bro? It is, dude. Man, they're playing this stuff a little bit early today. All right, but yeah, Apple rebounding back is at 145. Amazon at 111s here, 111s. Yeah. He was a big backer of Meta when it failed. He felt like he failed everyone. Yeah, that's what it is. I mean, it's a blow to his credibility. I mean, Kramer's got some credibility. He's a stock market staple, man. He's a staple in the stock market, bro. You know what I mean? Like that's what people got to see. Kramer's been around for before a lot of you guys were born talking about stocks. And so in that regard, like he's a staple in the stock market, man. He's important in terms of stocks. He's certainly he's a stock market staple. As much heat as he gets, and so he wants good credibility. He doesn't want bad credibility. He just came out a little bit too hard against AMC and GameStop, and it is what it is. Market will humble people. Jake, you've been pretty negative, man. It's like, look, I'm gonna give you a one warning. Last 3-4 things you said have been little bitty critiques of insignificant things, man. So it's fine to hang out here and every now and then have constructive criticism, but when everything you say is negative, I've noticed you last week, and so again, just a fair, friendly warning. If you're negative again, I'm just gonna ban you, bro. Anyways, Apple up to 145s. If we look at the market over like a 10-day period here, market has basically came all the way back down to where it was prior to this last little bull run. Yeah. Yeah, man. Again, I can relate. It's hard to be out here in the yeah. What's up, Bulldog? No, it's all good, bro. Like I said, friendly reminder, man. I try to let people say whatever they want to say, but eventually it's just kind of like people are just like I said, people for whatever reason they just kind of desperate to criticize sometimes, and I think they're probably like that with Kramer too. I think they give Kramer a little bit too tight of a rope. in that regard. And I think, everybody's wrong sometimes. I was actually wrong about Meta yesterday. I bought the Meta dip and, got out for like 100 and something loss. And so, hey, what's up, B? How you doing, man? Yeah, 100% the criticism is warranted, 100%. Yeah, hey, I appreciate you, Daniel. Kramer on TV every single day says yeah. I mean, here's Kramer's problem, right? Kramer, he got a little bit too outspoken, man. So it's one of those things where it's like if you're gonna dish it out, you got to be able to take it, And so if he's gonna dish out criticisms about specific stocks, he's got to be able to take it about specific stocks too, You are a nice guy for sure. I never comment, but I like the way you deal with people. Yeah, I try to give people time. Like I probably give people a little bit too much, room. I would say sometimes where I should just kind of ban them and like not even say anything. I end up saying, hey man, if I have a character flaw, that's probably it. But I try to give people chances here. Definitely top 3 moderators on YouTube right now. I will buy Meta at 95. Yeah, I mean, I still think Meta's probably going to go up long term. I ended up cutting mine just because I think the risks are just a little bit too sizable for me personally myself. But I still think Meta will probably be higher than where it's. If we look at Meta in a year from now, it's probably going to be over 100, I would say. What do you guys think? Again, looking at her polls. Yeah, his ego is hurt, We are waiting right now for Apple and Amazon earnings to drop. The numbers come out at 4 p.m. Eastern Standard Time. So the data comes out 4 p.m. And I appreciate all my mods, man. I really do. We got a lot of great mods here. It's to the point where I think I probably have too many mods, because I really do. We've got like so many different mods working for the channel. We've got like DS, we've got Daniel, we've got Spac, we've got Douglas, we've got Pawn. 5 mods is probably a little bit overkill, I think. You know what I mean? And so it's kind of one of those things where I think I probably just got too many mods. And I appreciate you all. If I don't say it enough, I truly do appreciate my mods here. Thank you guys. Amazon at 111.30s here. Apple at 145s. It's at beginner trades, D's. At beginner trades, bro. Yeah, I deal with people so well, man. Definitely top 3 most humble and, best people dealers in the world, Or maybe that didn't sound right. Okay, let me rephrase that. Definitely top 3, personalities in the world for sure, Definitely top 3. Apple has not had 2 quarters in a row loss before. This will be a big disappointment if Apple is the main vein of the U.S. economy, and Amazon also as well. But I think guidance will be good since third quarter GDP was better. Yeah, we had 0.2% GDP growth. We'll see. Let's look at the chart for Apple earnings here. Apple analysts expect Apple to earn $1.27. Okay, $1.27 is what's expected for Apple. Apple's starting to rebound a little bit up as well. Looking at the other numbers here. So let's look at the Apple EPS chart is what we got to do. Charts are always the most interesting things to look at. You can look at like macro trends. Apple EPS for the quarter ending June 30th was 120, down about 7.7% year over year. Apple EPS for the last 12 months ending June 30th was 605, about 18% down. Or no, I'm sorry, 18% up year over year. 21 annual EPS was 561, which is 71% up from 2020. So that's a huge increase. 2022 EPS was 328, which is a 10.5% increase from 2019, essentially. 2019 EPS was 297, which was down 0.34% from 2018 here. So the last 2 years, let me see. So the last 3 years have been growth years. Okay, so EPS increased in 2019, in 2020, and in the last 12 months ending in June 30th. Now, at the same time, though, the last quarter was negative. We went down, like somebody else mentioned, we went down 7.69% year over year in the quarter ending June 30th. So the last EPS was actually negative. If we post another negative EPS today, then that'll be the first time in history that Apple has had 2 consecutive losing quarters. Now, or declining quarters, not losing. There's a difference. So, again, let me know what you guys think. Do you guys think Apple will do well or not? I appreciate all the follows on Twitter. My guys, thank you, team. We got about 60-something votes on Twitter. 77% are saying put options. Only about 23% are saying calls. Oh, hell, me and DS about to get fired. Nah, man. Okay, got you, Jake. Yeah, man. Hey, listen, it's all love here, bro. Again, I kind of have a short leash with that type of stuff. It's just, if I see somebody here, like, just to show you guys the way I run things, right? And it can get kind of iffy sometimes because it can just get difficult to manage things. But if I see somebody saying multiple negative things in a row, I see them. I see a lot of what people say, right? If I see somebody say multiple negative things, usually I give them a warning. If they say something negative after that, I usually just kind of ban them because it's just not worth it. Like, think of it from my perspective, right? From my perspective, it's like, okay, do I want to deal with somebody just kind of waiting to criticize? Eventually you get people who sometime historically I'm bothered for whatever reason, and they just kind of sit around and wait to talk smack. You know what I mean? So when I can identify those people, it's actually great because I could just ban them. But at the same time, sometimes I'm a little bit overzealous with it, which kind of happens over time. So if you didn't mean it negatively, it's all love here, Jake. I appreciate you, bro. Just a friendly warning, I guess. It's all good. My plan is to ride the market down. I predict bad Apple and Intel guidance and market goes down. Oil goes up Friday, then down for FOMC and pre-election sell-off. Then go long with November 8 red wave. That stuff is super interesting to pay attention to. In the next 2 weeks here, we also have CPI on the 13th of November. So we do have CPI on the 13th. That will be interesting to pay attention to. CPI is going to be really important. I think this next rate hike decision on November 2nd is going to be influenced, of course, by the last CPI reading, which, if I can remember correctly, was 8.2%. What was the last CPI? 8.2% or something like that. And so with it, we'll see. I think the entire market essentially expects 75 basis point rate hikes. And so if that happens, I don't know what kind of reaction we're going to get. I think we're already baked into that reaction, or to that result already. But as I said earlier, if we show anything outside of 75 basis points for the November 2 rate hike, then we're going to have a big knee-jerk reaction, and it'll be fun to watch. And again, we are going to stream that. It's at 2 p.m. The way rate hikes in the Fed work is that every 6 weeks, the Fed raises or lowers rates, depending on how bad inflation is. And if inflation is really bad, they raise rates. They raise rates to discourage spending by raising interest rates. When you raise interest rates, people spend less. And by people spending less, businesses in turn, lower their pricing, thus combating inflation. That's why they raise rates or lower rates. That's how the Fed works. And of course, right now we're in a time of high inflationary problems, and so the Fed is being aggressive. But when the Fed raises rates, it causes a lot of short-term problems. It causes short-term pain because they're essentially trying to discourage buying, right? And when you get a lack of buying, stock market drops. And so, but it does more for optimism long-term because it combats inflation. So we'll see what we get. Again, expectations are for 75 basis points. And we'll see. It'll be fun. Apple and Amazon earnings are coming out today. That'll be interesting to see kind of how the stock market reacts to all these. earnings. These are behemoth companies, the largest companies in the world. And so with that, the earnings today on Apple and Amazon will influence markets heavily. We have a pretty red day already in the market here. You got Apple on the right. If we look at the SPY in the middle, we're somewhat red. We're not completely red. It looks mostly choppy, to be honest. Like rangy, neutral, but slightly down. We're right under the previous closing price. So I mean, we're down, but it's not, I guess, a really bad day. Tech, and so I'm sure if we look at the Q is getting affected. It looks like a little bit more than just the basic S&P 500. So Q is down a little bit more than like just the basic SPY or S&P 500. So tech is getting affected by probably Meta's weakness over the last couple of days. Google down some as well. We ended up buying the dip in Google here. We got 45 shares of Google right now. We might add more. I don't know. I like this price point for Google, though. I think Google's very cheap at $92. I just think objectively, it's valuable here. Long term, it'll probably stay above this. And let me know what you guys think. Do you guys agree with that? Amazon's actually a pretty interesting one to watch today as well. We had Shopify earnings this morning that were mixed. So it'll be interesting to see what we get in that front, is on that front as well. Let me check back on everything. No, it's not time to ban anybody, bro. What I might do, though, is eventually I might have to... I don't know if we need 5 mods, I mean, and I really appreciate everybody. It's just kind of hard to manage all the different mods, Like, listen, if we were getting 10,000 views a stream, I mean, I guess we kind of are. We're getting like 6,000 views a stream. I don't know. We'll see. I mean, as long as y'all are okay. I feel bad not paying people. And like with 5 people modding for me, I can't pay everybody. That's, to be honest, that would just be kind of wasteful. So I don't know. I'll think about it. All right. Amazon dipping down a little bit. It's at 110, 111s here. Apple at 145s, 145s. Doge is actually running. Is it really? 4 p.m. Eastern Standard Time is when it comes out, Ramsey. 4 p.m. Or no. Sanjar. 4 p.m. Any opinion on when to grab up these cheap stocks in tech? I'm starting to buy some now. I started to buy Google. I'm holding Ford as well. Ford actually did okay today, though. So Ford, I'm actually green in. We made a little bit of money on Ford. What else am I holding here? Yeah, we're holding Google, Ford. Yeah. And we cut Meta. But we're holding Google and Ford right now. We got almost 50 shares in Google. We pull back some more. I'll add some more to it. I saw the 10-year. Twitter announced crypto wallet stuff, so Dogecoin went up. Yeah, got you. That makes sense. Yeah, taking any sizable position purely based off of earnings ahead of earnings is usually kind of risky. Imagine if they raise 50 basis points. Yeah, we will fly. That's what I'm saying. Somebody said, hey, well, everybody knows we're going to do 75 basis points. Again, we don't know what we're going to do. We think we're going to do 75 basis points, and we probably will. But if not, market's going to go big knee-jerk reaction here. So here's the schedule for today. All right, so here's the schedule. Apple drops at 4:30 is when they're scheduled to drop. Amazon drops at 4 p.m. Intel drops at 4 p.m. Pinterest drops at 4:05. U.S. Steel drops at 4:15. T-Mobile drops at 4. Gilead drops at 4. First Solar drops at 4. Capital One drops at 4:05. Decker Brands 4:05. Pioneer 4:20. Everybody's favorite number. Southwest Energy 4:15. Dexcom at 4. And yeah, there's a few other no-name companies. But yeah, so Apple doesn't drop for another 50 minutes or so, but we're streaming that. All right, guys. So again, we're getting a pullback in Amazon here. If Google dips, I might add some more. All right, guys, pull it back under 111s now. Apple back up at 145.11s here. So we'll see what hold 145. I think this is a support or resistance area right there. Yeah, so again, Google at 92.60s. FOMO. Do you read book map? I don't know. I don't read it. Hey, good luck, Benjamin. Fidelity. Even if numbers are negative, we're still pushing up this quarter. I'm not sure about Bitcoin. I think the longer it holds over 20K, the better. What's the fee structure on share buying and selling with Chart Prime? It's not a platform. It's just it's an indicator service. I got 30,000 shares at the TQ via options. Anthony, hey, what's up, dude? Any altcoin of Bitcoin, even if numbers are negative. Fidelity, lotto ticket, option. Or no, 100 shares. Hey, Benjamin, good luck, bro. You know, interactive brokers. I use a few different ones. All right, guys, 145s for Apple. Amazon at 111s here. Let's see if we can hold that. SPY currently, if we look at it. All right, so again, Amazon's dropping first. If we look at when the actual earnings call is, the earnings call for Apple is at 5 p.m. The Amazon earnings call is at 5:30. But again, Amazon drops first. That'll probably move Apple, and then Apple drops at 4:30. So it'll be interesting to see kind of how we get these reactions in these. Dollar index is really confusing today. Correct me if I'm wrong, but it seems tough to scalp futures with these fees. Is futures just better to swing? No, I think if you're going to trade futures, you need to trade it with reasonable size. You know, if you're trading the E-mini, the fees are just really not bad at all. If you're trading the micros, you know, those are meant to swing. You know, somebody mentioned that earlier. I tend to agree. Micros are meant to swing. If you're trading the macro, like I trade the macro today, and with that, we're up about 230 on the day, right? I'll probably spend maybe $30 in fees. So I'll probably net 200 in profit today, give or take, is what my guess is. And we can check it tomorrow to see what it is. But I think if you're going to trade futures, you have to be willing to take larger size. And if you're going to swing trade futures, swing trade the micros. That's probably the best move, I think. But again, not an investment professional, not liable. If you lose, always make your own assessment, trade responsibly. You know, don't sue me. No idea what I'm talking about. Apple at 145s, SPY at 380s. Puts on Intel. Yeah, Intel drops today too. That'll be interesting as well. What does a washout bounce look like? A washout long? It's when a stock dips at the open and then rebounds back. It's just a red to green move. They call it a lot of different things. You'll have a lot of gurus call them a lot of different names. So you'll hear washout long, red to green move, opening bounce. You know, they're all the same thing. A, B, C, D, you know, cup and handle. It's all the same thing. You know, it's all literally the exact same strategy. What happens is you get people who are selling courses. They want to make it seem proprietary, like it's just them. So they call it all these different names when really, you know, it's all the same strategy. Anyways, Apple under 144.90s. Yeah, 13 minutes. Amazon announces in 13. Amazon always does well on earnings. Well, yeah, we'll see how they impact markets. Man, here's the question: do you think Facebook Meta rebounds from here? Here's Amazon. Again, less than 12 minutes. We're at 111.80s. Pretty red day all day today. Apple still dipping down a little bit. I have mine at Friday, so I'm doom or gloom. Hey, good luck. Intel earnings going to be ugly. Yeah, I don't know. I can see the other side for Intel. I think Intel. Well, wait a minute. Has Intel reported since the ETH merge? If the ETH merge was during this last quarter, Intel's going to be probably pretty rough, I'm guessing. I'm trying to think of when Intel reported last, and the ETH merge was early September. No, it was late September for the ETH merge. It was almost exactly a month ago, right? And so with that, Intel earnings dropped 728. So yeah, the ETH merge was. I don't know how much it's going to affect Intel though. I mean, Intel's big, but Nvidia is usually the microchip person for cryptos. I'm getting a little bit of a bounce back and stuff here. What if Mark is tanking the stock because they figured it out how to make a VR awesome? Nah, man, that's not what they're doing, bro. What they might be doing, what they're struggling right now because Facebook is not really widely used anymore, man. You know, like the problem is that people understand the trendish nature of social media brands, and with that, people understand the future longevity of Facebook and related apps. Hey, what's up, Gills? Hey, good evening. Yeah, metaverse has been the big. I mean, but they need the metaverse, bro. Like that's what. Like here's the thing, right? If they didn't have the metaverse, Facebook would not have young people. And as people age, people are going to stop using Facebook. Okay? Like listen, trust me. I grew up in the middle of all of this, okay? So when I was younger, originally we had MySpace. All right, first we had the internet in 95, 96, 97. You had chat rooms. You go around being like, "Yo, I'm 14, male, from Louisiana. Who are you?" Probably some dude named Bubba, you know what I mean? But you'd go around. That's kind of what started online interaction like that. It is those AOL chat rooms is really what it was, and maybe AIM a little bit too in like the early 2000s. MySpace came out. It was the first social media platform, and you had like your top 8 or whatever it was. You got to pick your top 8 friends, and man, it got cutthroat real quick with your top 8, bro. You throw shade at your friends and be like, "Look, you're not number 5 anymore, bro. You're number 7." Shots fired. Everybody, it just got dramatic really quick. Eventually, Facebook came along and it just kind of steamrolled through MySpace, really is what happened, right? But it kind of shows the nature of social media brands like this, where it's like you might be the hot thing now. In my opinion, they've got about a 10-year, decade-long lifespan. And eventually something newer and better is going to come up. And unless Meta, Facebook does a really, really good job at acquiring the next one, eventually their time's going to go. Like people just aren't going to use them anymore. Right now it's mostly older people that are using Facebook. Instagram is still relevant, of course, but that's not going to stay forever as well. And so what Mark Zuckerberg is trying to do is he's trying to invest money into young people. And how does he see that you do that? He puts money into the metaverse. That's what he sees young people are interested in. That's what he's doing. He's trying to buy the young vote, so to speak, of confidence, and then that's what it is. The problem, the kink in his plan here is that crypto crashed after he spent a lot of money on it, right? So he spent a lot of money on these metaverse ideas. He had the Oculus and all that stuff. and then Bitcoin and cryptocurrencies crashed in the last 6 months. That is what happened. That is why Meta is where it's at now, and that's why it's struggling. Markets started to break down, guys. We got about 7 minutes here, team. 7 minutes. Yeah, you guys know. Yeah, for instance, hey, I'm MySpace years old as well. Yeah, hey, then. Y'all know. Yeah. Yeah, I had a Legend of Zelda Majora's Mask website at like 12, I would say I was. Amazon, break it down. It's at 111 here, 111. We got Apple starting to test lows as well, down to 144.50s. Looking weak. Young kids eventually get old. Right, and here's the problem. People eventually get old. And when they have children, their children do not want to use what they use. Right, listen, I got a 13-year-old daughter. She does not care at all about Facebook. She wants a TikTok, is what she wants, And, that's the reality of it, which is that eventually you have children and your children just don't want to use the same thing that you're on. They don't care about that. They want the newest and best. And that's the nature of young people. And that's the nature of the problem right now in Meta and Facebook. So again, we have Amazon earnings getting dropped at 4 p.m. Guys, 4 p.m. Amazon numbers come out. And then at 4:30, Apple is scheduled to drop their numbers as well. And calls or puts, any predictions on Apple, Amazon stuff? Again, Apple drops at 4:30 specifically is when they're supposed to schedule, when they're scheduled to come out. Amazon misses EPS 100%. Roblox brought a lot into the metaverse and built up an idea that might work. Yeah. Yeah, let me know what you guys think here. We're right around lows here. So again, Apple drops their numbers. They're scheduled to drop at 4:30, which is in like 35 minutes. Amazon is scheduled for exactly at 4 p.m. on the dot, though. So we should have Amazon numbers coming out pretty soon, right at 4 p.m. on the dot. So again, we'll see what we get. We'll see if it's something interesting. Apple at 110.70s here. Y'all do me a favor, hit that like button, guys. We got 400 something people here, 73 likes. Hit that like button, guys. Run those numbers up. We appreciate it. Again, bull or bear? Are we gonna go up or down? Yeah. Apple, Amazon, Pinterest, Intel, Marvel. Yeah, we got a lot of stuff happening, man. A lot of stuff dropping. So again, Apple bopping up a little bit at 144.70s. I'd rather have haters than nothing, I guess. At least you know me. 145s for Apple. 145s for Apple. Amazon at 111s. Look for 3,800 as strong support if we get down there. These whole dollars. Hey, all good, man. Meta universe may be 10 years ahead of its time. Yeah, I think that's the problem. It's a little bit early, bro. A little bit early for the metaverse, man. All right, guys. Less than 2 minutes. Less than 2 minutes. It's time, bull or bear. Let me know what you guys think. All right, at 110.70s here, 110.70s. Apple at 144.70s. All right, guys, we got less than a minute before these numbers actually drop. We're going to put the stream mode in sub-only mode, so announce yourself, show that you're subscribed. We appreciate you all. Hit that sub button, guys. Hit the notification bell. Apple popped up to 145, got rejected there. We got over 500 people here. We got about 1 minute before the Amazon numbers drop, and it might cause some interesting action in the stock market here. So, again, numbers are about to come out. We'll see how it impacts everything. We did buy the Google dip, and we're down a little bit. I'm going to add another couple shares. It depends on what we do here. This Google trade, you know, if Amazon comes in better than expected, it should influence Google as well. Again, 30 seconds, guys. 30 seconds. Yeah, we'll cover Intel as well. We'll cover all of them, really. We'll cover all the majors. If I forget one, remind me. I'll cover it. All right, guys. 5 seconds. 3 seconds. 2 seconds. All right, let's see what we get. Watching Amazon, guys. Amazon on the left. Amazon on the left. Apple's not scheduled to release for about 30 minutes. Amazon on the left. It's at 110.90s. Nothing out yet. Patiently waiting here. Nothing out yet here, team. Waiting. Nothing out yet. You can see kind of sideways action here. Again, subscribe. We're going to be covering it as soon as it drops. Waiting. Nothing out for Apple or Amazon. You see Apple on the right, Amazon on the left. Nothing out yet. Patiently waiting. Apple on the right. Can y'all hear the music? Let me know. We are going to stream the earnings calls, and so with that, we got to make sure the music's rolling. All right, Apple or Amazon down big, down to 107 short term. Looks like it was negative. Waiting for the numbers to actually come out. Not showing anything yet for Amazon here. Big drops down to 105 though. All right, so Amazon numbers are out. Bear with me. We're going to look at it real quick. Hold on 1 second. Amazon numbers are out. They showed net sales increase 15% to 127.1 billion in the third quarter compared to 110.8 billion in the third quarter. Let's see what else this showed. Operating income. Amazon showed EPS of 28 cents, beat the 22 cent estimate. Sales missed 127.1 billion, missed the 127.84 billion estimates. So again, mixed results for Amazon. We're going to put the numbers up on chat. Amazon is crashing down here. Huge drop for Amazon. Wow. That's a big drop here. Here's the numbers right here on screen. We're looking at the guidance numbers as well, but that is a huge drop for Amazon, down to $97, $95 a share here. Is this guidance related? EPS of 28 cents, beat the estimates. Fourth quarter sales of 140 to 148 billion. That must be lower than expected. Net sales of way lower than expected guidance here is what's causing Amazon to crash. Lower than expected guidance here. Here's the guidance numbers. This is what's really causing Amazon to crash. These are the guidance numbers right here. They had mixed results, better than expected EPS, worse than expected sales revenue. What's really dropping Amazon right now, though, guys, is these expectational numbers here. So they see their guidance numbers for the fourth quarter of 2022. Net sales at 140 to 148 billion versus 155 billion expected roughly. So again, that is what's taking them. Intel also dropped as well. We're going to put Intel's numbers in chat. Intel dropped EPS 59 cents over expected 32 cents. Revenue of 15.3 billion over 15.25 billion expected. So Intel actually did better than expected here. If you look at INTC, Intel's actually down a little bit from this number, but they actually did better than expected here. Here's Intel on the in the chat. That's Intel's numbers. But again, the reason Amazon did poorly, guys, is because their guidance numbers were lower. Here, they had lower guidance. Their net sales came in lower than expected. They were expecting future projections for the fourth quarter at 140 to 148 billion. They ended up showing 150, or they were expecting 155 billion. They ended up showing 140 to 148. Apple still is not out yet. Again, Apple's scheduled to release at 4:30. Amazon again had worse guidance. International segment sales decreased 5% year over year to 27.7 billion as well. And again, their guidance numbers were worse. And you can see the full list of reasons why. But Amazon down big, down to $90 a share. Apple following it down in sympathy. Intel posted better than expected results, though. You can see those numbers in chat. There's a big drop for Apple here. It doesn't look like it's big enough from our earnings report yet, though. All right, there's Apple dropping. Apple put out something that said that they're going to reduce iPhone 14 to plus production. Apple is falling down to 142s here, guys. No earnings for Apple yet, though. But man, huge miss for guidance numbers. Huge miss for guidance numbers. Amazon just tanked. Wow. Big drop. You see Intel numbers in chat. Yeah, bears are loving life right now, bro. Bears are loving life. Honestly, Amazon is down huge, bro. Shockingly down. Like, that's a huge reaction here. I mean, they barely missed guidance. I mean, they didn't barely miss, but they missed guidance. They had mixed results. I think this is an overreaction, personally, myself. I might buy a little bit of Amazon right here. This is a huge drop. A huge drop. We're gonna buy 10 shares right here. I think this is an overreaction. That's a huge drop. You know, Amazon dropped 10+%. What is this? From 110 down to 90. Yeah, so it's 20% roughly, you know, give or take. So again, pretty big drop here for Amazon, man. I'm surprised Amazon dropped as much as it did. Amazon dropped damn near 15, 18% or whatever that is, whatever the percentage is, but that's a huge drop. Short term. Yeah, we bought this dip. I don't know if it's going to work. We're up a little bit in it already, but I think that's an overreaction for Amazon, to be completely honest. That's a huge drop here. And again, the reason they dropped was because guidance numbers were noticeably worse than expected. 92.15s. Apple still hadn't reported yet, of course. We're still patiently waiting for those numbers. At 92.40s. Apple at 142.50s. Yeah, I just think there's obvious value for Amazon at $80 a share. Amazon's so widely used. You know, Amazon's eventually going to have those drone, you know, those drone ships, you know. And so I don't know. I just think there's objective value here. Yeah, T-Mobile dropped their numbers here. What's T-Mobile? TMUS, right? Yeah, TMUS dropped EPS of 40 cents, missed the 68-cent estimate. Sales missed as well. So T-Mobile dropped worse than expected numbers. Apple's still waiting for the Apple numbers to come out. We're at we got about 23 minutes or so before those numbers drop. All right, guys, waiting for Apple numbers to come out. Still nothing at 142.40s. Huge drops, man, for Apple. Or huge drops for Amazon. It's dragging everything else essentially down too now. But with that, I mean, I'm just buying stuff now. I mean, that's okay. I don't mind buying stuff. We might add a little bit more to Google here. Not too much more. Or to Amazon here. There we go. We got 15 shares now. But man, tanking everything else down with it. So the UK Prime Minister Sunak is reportedly exploring tax rises and spending cuts of up to £50 billion, according to FT. Apple's starting to test that low at 142 here. And again, Apple numbers are going to be interesting as well. Amazon had a huge reaction. Again, Amazon missed guidance numbers, which were the most relevant thing to cause this drop. Amazon guidance numbers came in worse than expected. They expected 155.15 billion in net sales for the fourth quarter. They only showed 140 to 148. They beat on EPS, which is profitability, so they came in a little bit more profitable than last time, and a little bit more profitable than ultimately expected, but they missed in sales revenue. This is not pre-market. This is after hours. And yeah, you can buy it after hours. That's what we just did. Apple drops at 4:30. What source are you using for earnings? I'm using a few different ones. I'm using Benzinga, TD Ameritrade, as well as I'm using Benzinga and then TD Ameritrade, mostly. And then Earnings Whisper to gauge timing. Pinterest just dropped. So Pinterest just dropped. Putting Pinterest numbers in chat. Pinterest dropped 11-cent profit. They expected 6 cents. Revenue of 0.684 billion. 684 million. They expected 669 million. So better than expected for Pinterest. Pinterest will probably go up. Still waiting on Apple numbers to come out. Here's Pinterest right here. So yeah, Pinterest is moving up on this. They dropped earnings a couple minutes ago. Still waiting for Apple numbers to come out. Intel came out better than expected, I think, on both fronts, right? Intel did better than expected. This is really insane. I repeat, it's like the crypto market. Never seen this. How is it possible the entire market keeps so positive? All these massive negative earnings. I don't know. I mean, again, there's not always a super positive correlation in those markets. So there's not always a positive correlation in those markets. I mean, there's usually there is, but nothing's 100% in markets. T-Mobile dropped fourth quarter EPS, 40-cent profit, expected 4 cents, revenue of 19.48 billion, expected 19.9 billion. So T-Mobile had mixed results. Sold all my stocks. Hey, good luck, man. Yeah, Boeing reversed though, didn't it? Again, T-Mobile did pretty well. If you look at T-Mobile here, they did pretty well in EPS beat, and they're flying up on that too. Gilead dropped their numbers, 190 EPS versus 143 expected, 7 billion versus 6.12 billion expected. But Amazon's really the one that kind of is causing the chaos here. Again, we bought a little bit. I'll keep adding to Amazon too. I don't think it's going to sit under, I don't think it's going to sit under 90 for very long. But I might be wildly wrong, and I have no idea what I'm talking about. It might just crash down. Certainly a possibility. Yeah, industrials are doing really good, Christopher, 100%. I don't know, Cool Doc. I don't know why the market's reacting like this. These are brash reactions, man. Again, kind of crazy. Amazon dropped 20% for nothing. I mean, it mixed results. Like, it had good EPS, bad sales revenue, slight miss on guidance numbers, 20% drop. Again, the only thing I can think of is maybe algorithms playing around. I don't know, but this is a huge brash reaction. Guidance numbers weren't good. I mean, it's future projection numbers, but man, is it worth 20% down? I don't know. People were talking about Meta. Bezos just lost some money. As long as we hold down here. Apple numbers aren't out yet. They're supposed to drop at 4:30. Put this up on screen so people see it. But yeah, Apple drops at 4:30 p.m. Yeah, what's up, Mo? Yeah, Intel had mixed results. Or Intel beat it, didn't they? They had better than expected results on both fronts. Right? Intel dropped 59, better than 32. Revenue of 15.3, better than 15.25. So again, Intel did better than expected on both metrics here. Pinterest did better than expected on both Yeah, Pinterest did better than expected on both EPS and sales revenue. Gilead did better than expected on both metrics. T-Mobile did mixed results, better EPS, worse sales revenue. Amazon did better on EPS, worse on sales revenue, and worse on guidance, which is really why they're dropping here. It wasn't a huge miss, though. I mean, they missed it by, what is that? Couple percent miss for sales, for net sales revenue guidance. So it wasn't like it was some type of catastrophic result. It's kind of strange, man. It really is a little off for Amazon to drop 20% from missed guidance, sales revenue guidance numbers for the fourth quarter. Like slight miss, only a couple percent. It wasn't like it was a huge percent drop. So again, I'm buying up this dip for Amazon. There's also some risks in this though, specifically Apple. If Apple comes in worse, then we're gonna get some drops. Apple just ripped up at 143s. I don't think the numbers are out for Apple. Let me make sure. Yeah, nothing out for Apple yet, but Apple's popping up a little bit. Here, close the door, baby. Please don't let her in. Hey, baby, look. Okay. Hey, great job, buddy. Certificate of achievement and addition. Hey, congrats, man. By answering all addition facts in under 6 seconds. Hey, buddy, I'm proud of you, man. Proud of you for your math work. Good job, buddy.
And
proud
if
of
you
you.
get it wrong, you have to re-answer it 5 times.
Okay.
So that was
Hey, man, I'm proud of you, buddy. That's great. Congrats, buddy. Yeah. Hey. Okay.
Alright, yeah, we gotta kick Rosie out.
Sorry, guys. My daughter has had the flu. Somebody give her a hug real quick, too. Love you.
Yay!
Feeling better today? How was school? Good.
She's over the flu. She doesn't have the flu now. But
Yeah, she doesn't have the flu anymore, but, she had the flu, Love you. Close the door so Rosie doesn't,
Alright,
All right, love you. All right. All right, guys. Hey, man, look at my son, man. My son got like a math achievement at his school. He said he answered some math problems in less than 6 seconds. So good for him, man. Yeah, he always likes math. Q futures minus 3.5% circuit breaker. Did it really? No, not yet. No, I think it's what, 7% is the S&P 500 circuit breaker amount. It's like what? I don't think it's 3.5%. I think it's twice that. Might be wrong though. Huge drops though here. At $90 here. Apple's still sideways. So again, the numbers don't drop for about 14 minutes. What kind of accent you got? South Louisiana accent probably is what you hear. Kind of might sound like, to people who don't understand, or people that don't know it, it might sound like I've heard Philly or Jersey accent, but it's a Louisiana accent. Well, hey, thank you guys. Appreciate the support. All right, guys. Apple's still consolidating sideways here. Again, do y'all think Amazon's going to bounce back? Still waiting for the numbers to show up. Appreciate all the compliments about my kids. Yeah, yeah. I'm trying to teach my son programming. Is what I'm trying to work on him. He's built for it, I think. Intel CEO says that cost reductions will include some, quote, people action starting in the fourth quarter. Yeah. So again, do y'all think Amazon bounces here? 7% it is. Yeah, that's what I thought it was. 7%. Hey, thank you, Mo. Yeah, I don't think circuit breakers happen in after hours. Yeah, for sure. Hey, thank you, Mo. Yeah, that's right. Hey, nice, Lewis. Yeah, I mean, I don't really hear much of an accent for myself. My heart is good. B, thank you, man. Did Intel cut guidance? I'm looking at it now. Again, waiting for the Apple numbers to drop. It should be sometime now. Intel's ripping up, though. Intel posted better than expected numbers. In terms of Intel guidance, let me see what they're showing up as. Just to put some understanding out there, when you're looking at earnings numbers, if you're looking for future projections, you want to see C's, right? Because they're seeing into the future, right? They're seeing, like if you say it C's fiscal year EPS of $2 is what they show. What was the expectational numbers here? For Intel, I don't see any expectational numbers, but okay, wait, here's the expectational. So Intel actually had a little bit lower guidance. Here's the Intel guidance numbers. I found them. So here's those numbers right here. Yeah, sorry, I'm gonna have to skip over a large part of the chat. I use a few different sources. Nitai. Circuit breakers are when they pause markets, they halt markets. This means they stop trading altogether if it moves over a certain percentage. Yeah, all good, Lewis. No worries, man. Hey, thank you. If Apple is good, I would like. Yeah, Apple is going to be interesting. Again, I bought a little bit of a dip in Amazon. Yeah, y'all subscribe if you haven't already, man. Again, we drop all free content. Apple dropping. Hey, we'll see. If it does, we'll be okay. Yeah, Apple's chopping back and forth, but we still got some time here. Oh, the dreaded sun's coming out, bro. Every earnings stream, the sun gets in my eyes. We'll see if we do. Intel is still moving up big. Amazon at $90 roughly. Apple consolidating towards the low of the range here. The low of the range. Yeah, if y'all could do me a favor here, just hit that subscribe button, guys. We certainly appreciate it. We're only about 350 subs away from 90,000 subscribers. So if you haven't already, guys, we certainly appreciate it. We are going to be streaming the full earnings call today as well for Apple. So we'll be able to watch the full, stock market reaction to that. We cover all the major earnings. Somebody asked me for Honeywell. What's the symbol for Honeywell? It is... there's so many earnings dropping today. I can't even find Honeywell. I can look it up. Somebody's got to tell me the symbol. There it is. It's HON. Honeywell dropped adjusted EPS of 870. Or no, Honeywell dropped third quarter EPS of 225, beat the 216 estimate. Sales of 8.95 billion, missed the 8.99 billion estimate. So missing sales revenue, beat on EPS for Honeywell. Amazon consolidating around $90 a share here, give or take, right around $90 a share. The Apple earnings calls at 5 p.m. In about 40 minutes. There is the Honeywell numbers. Chat. All right, that's right, SPAC, Yeah, if Apple's bad, it's going to be chaotic, bro. John, I'm glad everything went well. Hey, thank you, SPAC. Yeah, man. Yeah, thanks, brother. Yeah, dude. Apparently, like I said, I think what happened is the nurse messed up on my EKG, and that gave me a false reading. And that basically made me think I was about to die for a week. And then essentially everything was fine. I think that's what happened. They said I got the heart of a 16-year-old. I had a calcium score of 0. It's zero calcium in my heart. So definitely top 3 hearts in the world right now is basically what I have. Apple breaking down, it's at 142s. So again, we're right at these lows here. We do have multiple touches to these lows, 1, 2, 3, 4. Just to look like John Madden real quick, you can see the touches to these low levels. Now, I don't think these lows are really going to matter much once the earnings actually drop. We're going to blow past whatever this is. If it's good, we're going to rip over past this 145 level here. If it's bad, we're going to just kind of crash down. So we're starting to test lows now. We're scheduled to have these released in about 7 minutes, guys. 7 minutes before the Apple numbers are supposed to set to come out. Again, let me know what you guys think is going to happen. Looking at our poll here, we got about 1,000 votes on our poll. 39% are bullish, 61% are bearish. Apple just broke lows of the day here. We're down to 141.11s. 141.11s. Yeah, that's basically what happened, D. Yeah, all good, D. Apple earnings report is probably the most important one year to date. Well, Apple's the... I always forget. What's the larger company? Let's check it out. So Apple has a cap. Wait, that's McDonald's. Apple has a market cap of $2.4 trillion. Amazon, the market cap of 1.17. So Amazon is about half the size of Apple. And so Apple is more influential over movement for sure, just larger cap stock. And so again, Apple on the right, Amazon on the left. Amazon had bad reaction to worse than expected guidance is really what happened. So Amazon dropped better than expected profitability, which is EPS. If you hear EPS, just think profitability. Better than expected profitability for Amazon, lower than expected sales revenue. And their guidance numbers, which are future projections for the fourth quarter, came in slightly lower, only by a couple percent. You know, they expected 155, they showed 140 to 148. So only, you know, a couple percent depending on the high or low number that you're looking at. And so again, if Apple comes in bad here, it could spark some pretty big volatility in markets. If Apple comes in negative here, we drop in 5 minutes for Apple. Again, it could spark some pretty big volatility in markets. Let me know what you guys think is going to happen here. Honestly, guys, what I see here with everything dropping is I see long-term cheap discounts. Y'all can agree with me. Just be respectful. You know, for whatever reason, bears just get really weird. And again, I'm kind of a bear. Like, don't get me wrong. But when I'm seeing Amazon and Google drop to 80, 90 bucks a share, even though they're post-split, I still see some heavy discounts here, you know. And so I might start buying stuff up in anticipation of that. And I think that should be an understandable thing. Again, don't copy me. I certainly don't want people to copy me. Some of these might be longer term holds. I'm certainly more confident in holding Amazon or Apple or Google long term than I am in holding, you know, Meta long term. That's obvious. So again, we'll see what happens. 4 minutes, guys. Doge. Twitter's not going to be around as a public company by tomorrow. I believe they said Twitter's going private tomorrow. At least that's what I think. I'm trying to think of what site posted that, but I think Twitter's going private pretty soon. And so they're not going to be reporting ERs anymore because they're going private. You don't believe in the metaverse? I believe in the metaverse, but I think we're about 10 years behind, and I think there's a lot of ways it can happen outside of Meta, you know. All right, guys, 4 minutes, 4 minutes. Three minutes, guys, 3 minutes. Less than 3 minutes, guys. About 2.5 minutes here. Looking at the sentiment online, a lot of bears, a lot of bears. Looking at the poll votes before we start everything, we got about 1,100 votes here. 61% are bearish, 39% are bullish. We're starting to get a little bit of a pop up here. We got about 1,400 people. And so, hey, sub if you haven't yet. I would never pressure you to subscribe. But if you don't subscribe, I'll hate you and ban you forever, okay? Do it now. Edwards Life Sciences dropped their earnings. They came in at 61 cent profit, missed the 62 cent profit estimate. Revenue of 1.32 billion, worse than the 1.33 billion revenue. So EW came in worse than expected. Vertex Pharmaceuticals, which is VRTX, they dropped EPS of $4.01 profit, better than the 364 estimate. Sales revenue of 2.33 billion, better than the 2.23 billion estimate. So VRTX dropped better than expected results here. Again, about a minute and a half left, guys. About a minute and a half left. All right, guys. Good luck, team. Again, about a minute left. Here's really where the interesting stuff happens here. We're going to raise our desks. Or actually, I'm not going to raise my desk just because I don't want anything to accidentally get unplugged. And so we're just going to sit here. Amazon at 88.70s. Apple at 142s. Here we go, guys. Less than a minute. Less than a minute. Yeah, my heart's good, man. That's my heart's good, bro. Yeah, join our Discord as well. All right, here we go. 20 seconds. 20 seconds. Team. Let me know how you guys are doing. 142s for Apple. All right, here we go. I got everything ready here, waiting for the numbers to come out patiently. All right, there it is on the dot. Getting a little bit of a pop up, a little bit of a bounce up. 144s. All right, Apple numbers are out. 90.1 billion, up 8% year over year. Diluted shares of 1.29, up 4% year over year. EPS of 129. What did they expect? They expected 126, better than expected EPS. 129 EPS versus 126 expected. 90 billion in sales revenue, 90.1 billion. They did better than expected. Why are they dropping? Why are they dropping here? Here's the numbers in chat right here. I don't know why they're falling. Here's the fourth quarter EPS. Sales revenue came in higher than expected as well. Strange, man. Why are they falling? I mean, it's weird, but whatever. Hey, Apple had better than expected EPS and sales revenue. Let's see if we can find the guidance numbers. Maybe that's relevant here. Yeah, they beat on estimates, better than expected EPS, better than expected sales revenue. Wearables made 9.65 billion, services made 19.8 billion. I put all these numbers in chat so you guys could see it. But hey, they're dropping. You know, sometimes the market's nonsensical, and I guess that's time right now. Yeah, maybe higher numbers is worse for inflation. Better than expected numbers, Apple tanking. 129 on revenue of 90.1 billion. 127 estimates. I'm looking for guidance numbers is what I'm looking for. I don't see it yet. But yeah, better than expected numbers here. Again, they dropped 129, expected 127, so better there. 90.15 billion expected, 88.9 billion expected. Here is the full list according to Newswires. We'll put this number up on screen. Better than expected numbers here, and we're getting some drops. Google bouncing back, though, with everything. They beat on like 6 different things, yeah. Hey, thank you, Harry, my guy. Thank you, brother. Yeah, Amazon down big. Yeah, Apple doesn't give guidance. But, yeah, down big. Yeah, again, y'all subscribe. We cover all these major economic releases for free. We don't charge a penny for anything. We kind of put everything out there for free. And my goal with this channel and community is to create a free resource for traders to get together and have this knowledge for free put out there as soon as it happens without charging you for it. And so if you haven't already, guys, hit that subscribe button, hit the notification bell. I really appreciate the love and support. We stream every weekday morning. We cover all the major Echo releases. Next week, we got the rate hike decision by the FOMC meeting and rate hike decision next week. That'll be fun and interesting. Let's see if Apple rebounds here. They did beat on a lot of different things, and they're down huge from it. Not huge, but they're down decent from it. Google and Amazon are both down pretty sizably today. And again, we'll see if we get anything. We are going to stream the full earnings call at 5 p.m. in about 25 minutes. I am from Louisiana, Phil. Thank you, brother. Appreciate it. Yeah, miss on iPhone and services, maybe. Starting to rebound, though. Here we go. Starting to bounce back. I think in general, trend is down. When markets go open tomorrow, it will tank for sure. It's possible that the NRS stays up. I've definitely been short in NVIDIA for the rest of the month. Hey, nice, Phil. Hey, welcome, man. Go Tigers. Apple rebounded here, back up to 140s. Amazon at 88.70s. So we started to rebound. We're at 140 for Apple, rebounding nicely here. I mean, they had better than expected results. I don't know why they had the big knee-jerk downward reaction initially after the earnings drop, but they did, and but for whatever reason they did, and now they're starting to bounce back. Google bouncing back as well. Amazon, let's see if we can pull Amazon back up. So Apple starting to fight back here. Yeah, kind of short squeezes look like what this is. Shorts got trapped. Now it's up to 142s, 143s. I mean, this is good for me. Apple popping up to 144s, rebounding the market with it. Yeah, I don't think they usually show guidance though, do they? For Apple, right? They don't usually show guidance, right? All right, guys. And again, if you want to trade some of these big Echo releases, check out Top Step. Top Step is a funded account program for futures. If you look at the E-mini here, and then you look at Apple, you'll notice something. They look pretty similar. Big downward move, big bounce, small pullback, big downward move, big bounce, small pullback. And you can trade this left side here during these big releases with no PDT restrictions in the futures market. Top Step is a funded account program in futures. They give you a demo. If you can hit the target on their demo while following their rules and conditions, they fund you. They are a sponsor of my video, and it's one of the ways we keep everything free here. Is we do have sponsors, of course, and affiliates. And so if you want to help support the channel, you can check out Top Step. They are the most legitimate funded account program in the world. They're regulated by the Chicago Mercantile Exchange. They legitimately fund people. They pay out millions, fund thousands of traders a year. There's the link. Check it out. No PDT in futures. But yeah, Apple started to rebound. It's back up to 143s, 144s here. If we look at Amazon, Amazon's starting to rebound back a little bit from this as well. We're back up to $90 for a split second. We're starting to come back a little bit here. We are going to be streaming the earnings call as well. Volatility is insane. Yeah, for sure, man. Apple up to 144s. Amazon back up to 90 plus. Hey, thank you, Ricky, my guy. Thank you, brother. Plunge protection team. Hey, again, shorts are shorts stuck right now. Let me know what you guys think. Our shorts stuck right here. We're starting to see a rebound in all markets, though, for the most part. Intel CEO says that cost reduction ones include. Let's see what else we show. Amazon CFO says that a stronger dollar led to a US 900 million headwind, larger than the company had anticipated. Saw improvement in productivity in Q3, but not as much as planned for Amazon here. Oh, you didn't know? I'm just Edward from Twilight, bro. Here. Here you go. I'm doing this for you. Just for you, bro. Just for you, bro. There you go. All right. But yeah, Apple up there. Let's see if it holds support of that previous low of the day. Google is rebounding a little bit. Amazon all the way back up to 90.3s here. Yeah, my name's Edward now. I'm changing my name. Yeah, every single earnings stream, just the sun and me are just having problems, bro. Imagine buying an Apple product. I mean, I'm more of an Android person myself. I mean, if you look at me, I got the Z Fold phone. You know what I mean? Like, it's a phone, it's an iPad. You know, it's pretty cool. I can download emulators and ROMs and stuff like that on it. So I mean, you know, Apples are a little bit too restrictive for me personally as in terms of phone. But the rest of my family has one. My daughter has one. My wife has one. You know, I'm the only guy with an Android. I don't think Apple usually drops guidance. If you really did, hey, I appreciate that, Pawn. I'll let you know if I get it, bro. If you did, I appreciate it, man. It'll be useful, honestly. It'll be super helpful. Weird, man. Now it's saying people are showing up. All right. Checking out on our Discord. Man. All right, guys. Google rebounding here. We're pretty close to break even now. But man, what are we in right now? Yeah, we're pretty close to break even here. So we basically came all the way back. Maybe I should have added some more at the 89s or whatever it was, but it's all good. I got about 20 minutes before the earnings call. It starts at 5 p.m. We will be streaming it live. Any critical earnings tomorrow? I believe tomorrow's gas earnings, right? Like energy earnings or tomorrow, if I remember correctly. Yeah, ExxonMobil, Chevron, Air Canada. Some energy stocks. Exxon and Chevron tomorrow. Charter, Imperial, Gentex, Air Canada, Nextera, Ranger. Wait, are you telling me we got... Wait a minute. Are you telling me we got two energy companies? One of them is named Next Era, like NEXT space era, like Next Era Energy. And then we have another one called one word, Nextera Energy. What a bunch of original folks over there in the energy sector. Apple's starting to rip back up. It's at 145s right now, 145s. Amazon at 90.7s here. We'll see if it actually holds support there. It's right around $90. Again, we'll see if it actually holds support at that $90 level. Apple up to 145. We'll see if we actually get anything good moving forward today. Again, Apple did great. Initially reacted pretty negatively, and then trap shorts start to rebound back up to 145 where it's sitting now. I don't think Apple drops guidance. Amazon guidance is the whole reason it's down so dramatically. It dropped worse than expected guidance. They expected like 155 net sales revenue for the fourth quarter. They ended up showing like 140 to 148 or something like that. It was only a small miss, but don't tell traders that, because the market just, the Amazon stock just cratered from that. 145.10. Yeah, I don't look at charts at all, Underground Famous. I mean, what you see here on screen is just not a chart right now. This is just not a chart, okay? This is in your head. You know, we project in your head. We're the next version of the metaverse coming soon. But yeah. Let me know if you guys are bullish or bearish. We got Apple pulling back. It's at 143s. Amazon at 90.8s. Apple being down only by 1% is pure luck. Yeah, I mean, it's down to 143s. Are y'all buying this dip? Bro, the sun is still in my eyes, bro. I can't really raise this thing anymore. Yeah, I mean, they had pretty good earnings. I mean, again, Amazon had mixed results. They weren't great. I wouldn't call them great. They had better EPS or profitability, worse sales revenue, and then lower guidance. And so they didn't have great results. Apple, on the other hand, had great results. It did better than expected on everything. Didn't report guidance, but I don't think it usually does. And they did higher than expected for EPS and sales revenue. So better profitability and sales revenue. Amazon, mixed results, better EPS or profitability, worse than expected sales revenue. So a little bit mixed back and forth. Hello? Hey. No, I'm streaming right now, baby. Hold on. What? Okay. All right. Well, I'll text you. Okay, I'm streaming right now. All right. Love you. Bye. All right, guys. Again, we got the earnings call. It's scheduled for 15 minutes. People are asking me about blinds here. Let me show you guys what I'm struggling with right now. You see that right there? That's it right there. You see that? I have blinds, you know, but like I have blinds, but like it doesn't matter because this thing is just, you know, the sun's just at the worst spot. Yeah, 90.2s for Amazon. We are bouncing, or we are dropping a little bit down now in Apple here, but we're still in a range. We had a pretty good reaction from the last 20 minutes or so. We'll see if we continue. Amazon's pulling back to that $90 support level. All right, team. Would the market be green tomorrow morning? Phew, I really don't know. I think it could go either way at this point in time, to be honest. You know, I mean, we might be, again, I think we could continuation on this downward trend, but I think that we also could argue that we're down so much already that it might be time for a rebound back up. And so I don't really know here. We'll see. There we go. That's the best I can do. All right, starting to rebound. We're back up to 91s. $91.30s for Google. Starting to pop back up here. Probably slightly green in Google now, or for Amazon, I mean. Another way you could trade these Apple earnings here that's actually really, really useful is you can do something like this. Like here's Chart Prime. You can use this to kind of identify where the momentum is coming through with these. Super useful indicator service. They are a sponsor of mine as well, so I'm certainly biased in their favor. But it automatically documents support or resistance. If you keep zooming back here, it's actually pretty accurate. I mean, look at this. Possible reversal up, and then we get a nice little pop. Let's zoom out a little bit here if we can. Possible reversal up, we get a bounce. Bearish candlestick, we get a drop. Possible reversal up, we get a bounce. And so it automatically documents the support or resistance. I like using it just for the candlesticks too, and it also has oscillators. You can see like right now the dollar has a strong negative correlation with the SPY right now. So the dollar index has a strong negative correlation with Apple and the SPY right now. And so a very useful indicator service. Again, it does signal different things. Possible reversal up, bounce, bullish engulfing, bounce, possible reversal up, and a bunch of bullish engulfing candles, bounce. Pretty useful. Possible reversal up, nice bounce. And so again, you can kind of use it to identify your trades. It is a sponsor of my video as well, and so if you want to check them out, again, I'll post this link. Great ways to help support the channel, guys. We got about 12 minutes before the earnings call starts. Tesla's not really crashing per se. I don't think. It's mostly just dropping because everything else is falling right now in sympathy, I'm assuming. Tesla is just reacting to the market being down. Amazon just tanked, and that dragged tech down with it. And Amazon is a tech stock, or Tesla is a tech stock to a certain extent. Man, I found out my heart's okay, and now I'm just eating, you know. Now I'm just eating, you know. General Sal, full rack of dry rub ribs, you know. That's what I'm getting today. Apple up to 144s. Hey, thank you, Tony. Yeah, man. All right, guys, we got about 10 minutes. Remember, guys, Apple earnings call starts in 10 minutes. Yeah, it is so good. General Tso's chicken is so good, man. Today, the countries that borrow money have to pay back. What type of trading do you stream at the open? Mostly futures and stock day trading, swing trading as well. Is some investments. A little bit of a downward hammer kind of candle here. We got this big downward wick. We probably get some upward action. Let's see if the rest of the market reacts. Here's Tesla on the left. Here's Amazon. Yeah, we bought this dip at Amazon. We'll see what happens. I noticed most channels don't know how to trade. Yeah, I mean, like I said, we trade a 30,000, 120K buying power account. If you've heard, okay, here's the calls out. Like, these are the, I don't really make call outs or picks, and I really don't want people to copy me. But if you look back at my swing trades over the last like 6 months, this is mostly them. I've swing traded Disney, I would say at least 4 to 5 times. I might be wrong, but I would say at least 4 to 5 times. Been green on every single Disney trade, swing trade. I traded Snapchat multiple times. The last one I got in Snapchat, announced the dip buy. Had a lot of people hate on me. I bought the dip at like $7.80 to $8. Ended up making pretty decent money. Snapchat ripped up 25% over the following 3 days as I scaled out of it. That was another one. But I've swing traded Snapchat multiple times prior to that at least. Made money every single time. I made money on Apple in the last 6 months swing trading. The only ones I've really lost money on in swing trades, I lost some money on Intel. And then I got out of Meta yesterday for a loss, but it was only like a $130 loss. All right, so here's some negative things. Hey, thanks again, man. You were working hard for us, and we appreciate it. Thank you, Chef, my guy. Thank you, brother. I appreciate you, bro. Thank you, sir. And yeah, we got the call starting soon, guys. Call starting soon. But yeah, so we're not perfect, but we're pretty solid, I think. No, Phil. No, don't know anybody by that name. But yeah, thank you, Chef. I appreciate the money. Thank you, Ali B, my guy. Thank you, brother. $2. Thank you, brother. I appreciate you guys. Thank you guys so much for donating, man. I really appreciate it. You guys don't have to. I really, truly appreciate it, though. Thank you. 2 days is not long enough to figure out whether a strategy is profitable or not. Matthew, you know, it might work today and tomorrow, but that doesn't mean it's profitable. You get a random distribution of wins and losses, and really, you're not going to know whether it's truly profitable for at least another 3 months. You know, you got to have a big sample size to determine whether something's actually profitable or not. All right, so Amazon started to bounce back. We got 15 shares. We'll let it ride. Google bouncing back as well. We're pretty much flat in Google at this point in time. You can watch it right here. Bar. You can watch it right here. Yeah, I mean, I bought the last Disney trade I got out of was a couple days ago. I got out of, yeah, we're going to cover the Apple earnings call. We're going to stream it live. You'll be able to watch it here. But no, I bought Disney at 91.60s. I sold it at about 102 or 103. Disney right now is at about like 104. So yeah, I mean, we made a bunch of money, you know, in our last Disney swing trade. We bought it at 91s. We were very open about it. We announced it multiple times. And, you know, we showed people it. And again, Disney was just an easy bet. You know, my swing trading strategy is very simple. We wait for healthy blue chip healthy companies. It needs to be specifically blue chip companies. We're not doing it with penny stocks because most penny stocks, if you're trying to bet that a penny stock's going to go up long term, you're trading against the normal trend of penny stocks. Most of them fail. And so, investing and swing trading in penny stocks most of the time is a sucker's bet. But it's high risk, high reward. And there might be some where you can find that are good, but most of them aren't. Aside from that, though, I like looking for healthy, long-term companies, and I buy the dip and I wait, and I can hold it as long as I need to, really. Google rebounding nicely here, or not Google, Amazon rebounding nicely. This is why we buy these dips, man. Everybody hates it. Bears, for whatever reason, they don't understand when we're starting to see a bottom. Is the problem. We're going to take a piece of this off. No, we'll give a little second more. Okay, we're going to take a piece of this off. And that way, if it goes against this, we're still going to be green or break even. And we'll let the rest ride now. We're also in Google, which is now break even as well. But buying the dip makes sense. So Amazon said some stuff that just came out. Amazon CFO said that the company is preparing for what could be a slower growth period. The company is being very careful on its hiring. You see that number there? He also said that they're preparing... they're seeing weakness in Europe relative to the U.S. We're not going to let you post anybody else's channel, Think Pod. Sorry, bro. Yep, no promoting other channels without asking, man. Especially, like I said, we're just not going to allow it, man. Sorry. Why is Amazon going so low in the last hour? So Amazon had worse than expected guidance numbers is what happened. So Amazon had worse than expected guidance numbers. Jack, here, no, get out of here, bro. Here, no. Get out of here. Do not do that. You can unplug my stream. Hey, no. Listen to me. No. Get out of here. Sheesh, man. I don't like having to chew my son out, but my son comes over here just completely disrespectful. I tell him no. He keeps pushing. 8-year-olds, man. Anyways, Amazon at 93s. We got Apple at 144s. Only good options are straddle. Yeah, taking any big sizable positions ahead of time is not what you want to do. Yeah, no, I got to get my son's my son comes in here. He doesn't have a shirt on. He almost walks in front of the stream. I got a big mess of wires underneath me, right? So a huge mess of wires and nonsense underneath me, right? So literally, I don't want him electrocuting, anything or himself really. And I don't want him to unplug my computer and disconnect the stream right before the earnings call, And so I'm trying to snap him out of it and say, hey, yo, you can't be in here. But he doesn't listen, Oh no, he was on the stream this morning, man. Y'all should have seen him this morning. He was asking me about Roblox is what he was asking me about. Smart kid. All right, guys. So the earnings call is about to start. We got less than 3 minutes. Y'all bear with me. I'm going to pause this. Yeah, Jack even predicted Roblox. Jack basically predicted that Roblox was going to drop. I asked Jack about 6 months ago. I said, hey, man, he's 8 years old. He was 7 years old at the time. I said, hey, man, what do you think about Roblox? You play Roblox. Is Roblox going to be worth more or less in 5 years? And he said it's going to be worth less, about half the price. And sure enough, that was when Roblox was about $80. Roblox is about 40-something now, I think. So he was actually right. Yeah. Nah, he didn't want to join me. He was trying to get a piece of paper so he could draw. Is what it was. I'd love for him to want to hang out with me, but he doesn't. He'll hang out with me for a little while. He hears that I stream on YouTube, and that's all he cares about, bro. My son hears we stream on YouTube, and so that's all it really is. But maybe if it's around when he's older, he can have this. We'll see. No, I mean, listen, he didn't want to come in here to hang out. If he wanted to come in here and hang out, I'd let him. No, that's not why he came in here. He came in here so he could grab a piece of paper, and he was kind of pushing the cords of my computer over, almost disconnecting it. So I had to kind of chew him out a little bit because he wasn't respecting my stuff. Had to go into dad mode real quick. It happens. Yeah, maybe he probably liked TikTok. I don't know about that though. All right, guys, we're still waiting for the numbers to come out. We're gonna turn the music off. Y'all can hear the music though, correct? Man, this Apple hold music is just terrible. It's just not good. Yeah, the call hasn't started yet. The call should be starting pretty soon. No, we got a German Shepherd couple, about a year ago. Great dog, beautiful dog, best dog we ever had. She loves Jack too. Rosie is her name. All right, we're waiting for the call to start, so y'all bear with me. Call starting anytime now. Yeah, you can see Rosie right there. This is Rosie. That's Rosie in chat. You see Ali B posting it. Waiting for the numbers to come out, or waiting for the call to start. All right, I kind of like this one. Who is picking this whole music for Apple, man? All right, we're waiting for the call to start. Y'all bear with me. It should be starting any time now. The earnings call starts now, basically, right now. We're waiting for it to start. Again, it's scheduled to start at 4 or at 5 p.m. It is 5 p.m. Eastern Standard Time. Yeah, that's his cat. All right, guys. They're like over there playing with the volume of the call. We're waiting for it to start. Amazon dipped down to 92. Apple at 143s. Google up to 91.80s, rebounding a little bit over the last 5 minutes. All right, here we go. Call's about to start.
Good day and welcome to the
Sound
Aapl
check.
Q4 fiscal year
Sound check.
2022 earnings conference call. For information, today's call is being recorded. At this time, for opening remarks and introductions, I'd like to turn the call over to Tejas Gala, Director of Investor Relations and Corporate Finance. Please go ahead.
Speaking first today is Apple CEO Tim Cook, and he'll be followed by CFO Luca Maestri. After that, we'll open the call to questions from analysts. Before turning the call over to Tim, I would like to remind you that approximately once every 6 years, we add a week to the December quarter to realign our fiscal periods with the December calendar. So this December quarter will span 14 weeks rather than the usual 13 and will end on December 31st. Please note that some of the information you'll hear during our discussion today will consist of forward-looking statements, including, without limitation, those regarding revenue, gross margin, operating expense, other income and expense, taxes, capital allocation, and future business outlook, including the potential impact of COVID-19 on the company's business and results of operations. These statements involve risks and uncertainties that may cause actual results or trends to differ materially from our forecast. For more information, please refer to the risk factors discussed in Apple's most recently filed annual report on Form 10-K and the Form 8-K filed with the SEC today, along with the associated press release. Apple assumes no obligation to update any forward-looking statements or information which speak as of their respective dates. I'd now like to turn the call over to Tim for introductory remarks.
Thank you, Tejas. Good afternoon, everyone, and thank you for joining the call today. come together in incredible ways to drive unparalleled innovation and deliver again and again for our customers. For the September quarter, we reported record revenue of $90.1 billion, which was better than we anticipated despite stronger than expected foreign currency headwinds. We set an all-time revenue record for Mac and September quarter records for iPhone and wearables, home, and accessories. Services notched a September quarter record as well, with revenue of $19.2 billion and more than 900 million paid subscriptions. We reached another record on our install base of active devices thanks to a quarterly record of upgraders and double-digit growth in switchers on iPhone. Across nearly every geographic segment, we reached a new revenue record for the quarter. And we continue to perform incredibly well in emerging markets with very strong double-digit growth in India, Southeast Asia, and Latin America. I'm also happy to report that during the quarter, silicon-related supply constraints were not significant. I want to acknowledge that we are still living through unprecedented times, from war in Eastern Europe to the persistence of COVID-19, from climate disasters around the world to an increasingly difficult economic environment. A lot of people in a lot of places are struggling. Through it all, we've aimed to help our customers navigate through the challenges while giving them the tools to drive progress for themselves and their communities. At Apple, creativity and collaboration have always been at the core of who we are. That spirit of ingenuity and teamwork helped us provide our customers with incredible innovations this year and led to another yearly revenue record. In fiscal 2022, Apple achieved revenue of $394 billion, representing 8% annual growth. We set records for iPhone, Mac, wearables, home and accessories, and services while growing double digits in emerging markets and setting records in the vast majority of markets we track. Customers are loving our iPhone 14 lineup, loaded with camera upgrades for sharper photos, action mode for smoother videos, and new safety features like crash detection and emergency SOS via satellite. iPhone is even more indispensable to our daily lives. iPhone 14 and iPhone 14 Plus come with a new dual camera system, industry-leading durability, incredible power, and amazing battery life. And our iPhone 14 Pro models are packed with even more groundbreaking innovations, including a new camera system, as well as always-on display and the dynamic island, which offers a whole new way to interact with iPhone. Just yesterday, our most advanced iPad and iPad Pro ever landed in stores. With its all-screen design, advanced cameras, and faster wireless connectivity, the 10th generation iPad looks and performs better than ever. For creatives, iPad Pro, now turbocharged by the blazingly fast M2 chip, is the perfect device to make something amazing. Our Mac customers have already been raving about the power of M2 since the arrival of our newest MacBook Air and MacBook Pro this summer. Their incredible long battery life, stunningly rich display, and lightning-fast speeds are a signature part of the Mac experience and help drive an all-time record revenue for Mac during the September quarter. In wearables, home, and accessories, a wave of innovation spurred 10% year-over-year revenue growth during the September quarter. New features in Apple Watch Series 8, including temperature sensing capabilities, retrospective ovulation estimates, and crash detection, are helping to keep customers healthier and safer. And the updated Apple Watch SE is a great way for users to start their Apple Watch journey, delivering advanced features at a new low price. The biggest, brightest, and boldest Apple Watch ever made, Apple Watch Ultra, pushes the boundaries of what a smartwatch can do. Packed with innovations like advanced navigation tools and the new Oceanic Plus app, which turns it into a dive computer, Apple Watch Ultra has something for athletes and adventurers on land and sea. The second generation of AirPods Pro, powered by the new H2 chip, are receiving rave reviews for delivering an unmatched wireless earbud audio experience while canceling up to twice as much noise over the previous model. There's no better place to discover the rich spatial audio capabilities of AirPods Pro than Apple Music, the largest music catalog anywhere, now with more than 100 million songs. And there's no other company that fuses best-in-class hardware with cutting-edge software and services to create a truly integrated and seamless experience. With iOS 16, we're giving customers more ways to personalize their iPhones through a customizable lock screen and focus filters. New features in messages and mail enable users to connect and collaborate like never before. Stage Manager in iPadOS 16 and macOS Ventura helps users stay more productive with smoother multitasking. And watchOS 9 is empowering customers to live a healthier day through updates to the Sleep app, a new FDA-cleared AFib history feature, and the new Medications app. Across our services, we continue to see enthusiasm and strong engagement from our subscribers. Apple TV Plus hits like Severance, Bad Sisters, and Blackbird have taken center stage on screens around the world. And baseball fans were glued to their seats this season watching Friday Night Baseball. Meanwhile, Apple TV Plus productions continue to earn accolades. At the 74th Primetime Emmy Awards in September, Apple brought home 9 statues, including a second consecutive win for Best Comedy Series for Ted Lasso. And soon, we're going to give audiences an even better entertainment experience when the all-new Apple TV 4K hits stores next week. We're also bringing Fitness Plus to more customers than ever by making our entire library of over 3,000 studio-style workouts and meditations available to iPhone users in 21 countries, even those without an Apple Watch. These updates are arriving just in time for a new Artist Spotlight series with workouts featuring the music of Taylor Swift and a new workout program, Yoga for Every Runner, featuring and designed with one of the world's top ultra-marathon athletes, Scott Jurek. While Fitness Plus helps subscribers stay active, Apple Card is designed with our customers' financial health in mind. For the second year in a row, Apple Card has been ranked highest in customer satisfaction for mid-sized credit card issuers by J.D. Power. And our users' favorite Apple Card benefit just got even better with the upcoming addition of a new high-yield savings account to help them save and grow their daily cash rewards. Turning to retail, last month our team members welcomed customers to the all-new Apple Jam Sale in South Korea. And through Today at Apple Creative Studios, we partnered with nonprofits in cities around the world to help young, diverse creatives pursue their passions and connect with local mentors. And our retail teams have done exceptional work helping customers explore our latest products and features. As we approach the holiday season with our product lineup set, I'd like to share my gratitude to our retail, Apple Care, and channel teams for the work they are doing to support customers. At Apple, we're proud of the ways we are able to help customers be productive, get healthy, stay safe, and unlock their creative potential. We also understand we have an important responsibilities to the communities we serve. That's why we continue to invest in education, racial equity and justice, and the environment. And we are making important progress toward a more inclusive and diverse workforce. Through our community education initiative, we're working alongside more than 150 partners to help students around the world learn new science and technology skills. This summer, we joined with community partners to support coding academies across the United States, from Code Academy in Nashville to One Summer Chicago to the Coding 5K Camp for Girls right next door in San Jose. We've also just expanded our Racial Equity and Justice Initiative into the UK for the first time. Alongside the South Bank Center, we're helping aspiring creatives develop their own voices and position themselves for long-lasting careers. Back in the U.S., we welcomed a new class of Black, Latino, and Indigenous entrepreneurs to Apple's second Impact Accelerator. This group of innovators is focused on using green technology to mitigate the effects of climate change and serve communities most affected by it. At Apple, we care deeply about protecting the planet for future generations. To that end, in support of our 2030 environmental goals, we have asked all of our suppliers to become carbon neutral across their entire Apple-related footprint by the end of the decade. We are also providing them with resources based on what we learned achieving net zero carbon in our own global operations. Across our entire product lineup, we also continue to source more materials through recycling while taking less from the earth. Every iPhone 14 is made with 100% recycled rare earth elements in all magnets, including those used in MagSafe. And in a first for Apple Watch and iPad, we're using recycled gold in the plating of multiple printed circuit boards in our newest devices. While we're working to reduce the footprint of our hardware, we're making changes to our software to be more environmentally friendly with the soon-to-be-released clean energy charging feature for iPhone. Our 2030 goal is a reflection of our relentless focus on the future at Apple. The world continues to be unpredictable as old challenges evolve and new ones emerge. What remains constant is the ability of our teams to create great products, services, and experiences while being a force for good in the world. Whatever challenges lie ahead in the new year, we're moving forward as we always have, investing for the long term to deliver incredible innovations for our customers like only Apple can. And now I'll hand it over to Luca for more details on our performance.
Thank you, Tim, and good afternoon, everyone. We are very pleased to report record financial results for the September quarter that cap another record fiscal year for Apple, despite a challenging and volatile macroeconomic backdrop. We reached the September quarter revenue record of $90.1 billion, up 8% year over year, despite over 600 basis points of negative foreign exchange impact, with new September quarter records in the Americas, Europe, Greater China, and rest of Asia Pacific. Importantly, in constant currency, we grew nicely in each of our geographic segments, with strong double-digit growth outside the US. Products revenue was $71 billion, up 9% over last year, despite FX headwinds, and a record for the September quarter. And it was a September quarter revenue record for iPhone and wearables, home, and accessories, and an all-time revenue record for Mac. Overall, our installed base of active devices continued to grow nicely. It reached an all-time high for all major product categories and geographic segments at the end of the quarter, thanks to extremely strong customer satisfaction and loyalty, and a high number of customers that are new to our products. Our services set a September quarter revenue record of $19.2 billion, up 5% over a year ago, despite over 600 basis points of negative impact from foreign exchange. We reached September quarter revenue records in the Americas, Europe, Greater China, and rest of Asia Pacific, and also in many services categories, including all-time revenue records for cloud services and payment services. Company gross margin was a September quarter record at 42.3%. It was down 100 basis points from last quarter due to unfavorable foreign exchange and a different mix, partially offset by leverage. Products gross margin was 34.6%, up 10 basis points sequentially, with improved leverage and favorable mix, partially offset by foreign exchange. Services gross margin was 70.5%, down 100 basis points sequentially, primarily due to foreign exchange. Net income of $20.7 billion, diluted earnings per share of $1.29, and operating cash flow of $24.1 billion were all September quarter records. Let me now get into more detail for each of our revenue categories. iPhone revenue grew 10% year over year to a September quarter record of $42.6 billion, despite significant foreign exchange headwinds. We set September quarter records in the vast majority of markets we track, and our performance was particularly impressive in several large emerging markets, with India setting a new all-time revenue record, and Thailand, Vietnam, Indonesia, and Mexico more than doubling year over year. Thanks to our strong iPhone lineup, we set a quarterly record for upgraders and grew switchers double digits. This level of sales performance, along with unmatched customer loyalty, drove the active installed base of iPhones to a new all-time high across all geographic segments, and the latest survey of US consumers from 451 Research indicates iPhone customer satisfaction of 98%. It was a great quarter for Mac. We achieved an all-time revenue record of $11.5 billion, up 25% year over year, despite significant FX headwinds. There were three key items that helped drive this performance. First, we benefited from the launch of our new MacBook Air and MacBook Pro powered by the M2 chip. Second, we were able to satisfy pent-up demand that carried forward from the significant supply constraints we faced during the June quarter. Third, as our supply position improved, we were able to fill the channel. Importantly, our investment in the category has attracted both upgraders and customers new to Mac and helped our install base reach an all-time high. In fact, we set a quarterly record for upgraders, while nearly half of customers buying Macs during the quarter were new to the device. iPad revenue was $7.2 billion, down 13% year over year, due to significant negative foreign exchange and a challenging compare due to the launch of new iPads a year ago. Despite this, the iPad install base reached a new all-time high, thanks to incredible customer loyalty and a high number of new customers. In fact, over half of the customers who purchased iPads during the quarter were new to the product. Wearables, home, and accessories revenue was $9.7 billion, growing 10% year over year, driven by the launch of Apple Watch and new AirPods Pro. This level of sales performance, along with very strong new-to rates, drove our install base of devices in the category to a new all-time record. For instance, 2/3 of customers purchasing an Apple Watch during the quarter were new to the product. Moving to services, as I mentioned, we set a September quarter record in aggregate and in most geographic segments, generating $19.2 billion in revenue in spite of very large foreign exchange headwinds. It is important to remember that we achieved double-digit constant currency growth in services on top of growing 26% during the September quarter a year ago. However, certain services were impacted by macroeconomic headwinds, including foreign exchange. Digital advertising and gaming are areas where we've seen some softness. Throughout the quarter, we continue to observe several trends that reflect the strength of our ecosystem and our long-term opportunity in the category. First, our continued install base growth across each geographic segment and each major product category represents a great foundation for future expansion of our ecosystem. Second, we saw increased customer engagement with our services during the quarter. Both our transacting accounts and paid accounts grew double digits year over year, each setting a new all-time record. The percentage of accounts that pay for our services continues to increase, and we still see plenty of opportunity ahead of us. Third, paid subscriptions showed very strong growth. We now have more than 900 million paid subscriptions across the services on our platform, up more than 155 million during the last 12 months alone, and double what we had just 3 years ago. We continue investing in new content and features across our service offerings. For example, we added several popular sports titles to Apple Arcade. We're also excited about our global partnership with Major League Soccer, where starting next season, fans can stream every single MLS match through the Apple TV app. This momentum helped us achieve over $78 billion in services revenue during fiscal 2022, a new record and up 14% year over year. We continue to invest confidently and believe strongly in the long-term potential of our services business. which is already the size of a Fortune 50 business on its own and has nearly doubled during the last 4 years. It was not only a record year for services, but also for our entire company. During the past 4 quarters, we grew our business by 8% or $29 billion, reaching more than $394 billion of revenue. We grew diluted earnings per share by 9% and generated over $111 billion of free cash flow, up 20% year over year. It was also a strong year for our enterprise business, as we set new annual records for iPhone, iPad, and Mac during fiscal 2022, and grew strong double digits year over year as our devices and services continue to help more and more companies empower their employees and serve their customers. For instance, Ford manufacturing employees are using iPad and iPhone to help further improve the quality of its game-changing Ford F-150 Lightning electric trucks. iPhone's powerful A-series chip and advanced camera systems, along with third-party iOS apps, are enabling Ford to automate the visual quality inspection process in real time to help address issues before they impact customers. And Cisco expanded its Macs as a Choice program and is now offering it to all its employees to help attract and retain top talent. And when given this choice, employees have chosen Macs twice as often as other options. In addition, many enterprise customers are taking advantage of the high residual value of our products and simple trade-in process to standardize the refresh cycles for their fleets of Apple devices. This allows employees to upgrade to the latest devices regularly while making it highly predictable and cost-effective for the business. Let me now turn to our cash position. Our business continues to generate very strong cash flow, which enabled us to return over $29 billion to shareholders during the September quarter. This included $3.7 billion in dividends and equivalents and $25.2 billion through open market repurchases of 160 million Apple shares. We ended the quarter with $169 billion in cash and marketable securities. We repaid $2.8 billion in maturing debt and decreased commercial paper by $1 billion, while issuing $5.5 billion of new debt, leaving us with total debt of $120 billion. As a result, net cash was $49 billion at the end of the quarter, as we continue to make progress toward our goal of becoming net cash neutral over time. As we move ahead into the December quarter, I'd like to review our outlook, which includes the types of forward-looking information that Tejas referred to at the beginning of the call. Given the continued uncertainty around the world in the near term, we are not providing revenue guidance, but we are sharing some directional insights based on the assumption that the macroeconomic outlook and COVID-related impacts to our business do not worsen from what we are projecting today for the current quarter. Overall, we believe total company year-over-year revenue performance will decelerate during the December quarter as compared to the September quarter for a number of reasons. First, we expect nearly 10 percentage points of negative year-over-year impact from foreign exchange. Second, on Mac, in addition to increasing FX headwinds, we have a very challenging compare against last year, which had the benefit of the launch and associated channel fill of our newly redesigned MacBook Pro with M1. Therefore, we expect Mac revenue to decline substantially year over year during the December quarter. Specifically on services, we expect to grow, but to be impacted by the macroeconomic environment, increasingly affecting foreign exchange, digital advertising, and gaming. We expect gross margin to be between 42.5% and 43.5%. We expect OpEx to be between $14.7 and $14.9 billion. We expect OI&E to be around negative $300 million, excluding any potential impact from the mark-to-market of minority investments, and our tax rate to be around 16.5%. Finally, today our board of directors has declared a cash dividend of 23 cents per share of common stock, payable on November 10th, 2022, to shareholders of record as of November 7, 2022. With that, let's open the call to questions.
Thank you, Luca. We ask that you limit yourself to 2 questions. Operator, may we please have the first question?
Certainly. We'll go ahead and take our first question from Shannon Cross, calling from Credit Suisse. Please go ahead.
Thank you very much. It's great to talk to you on the call again. I'm wondering, can you just talk a bit about how you're thinking about this iPhone generation? You know, on the positive side, you've raised prices. It seems to be mixing up. On the negative side, you know, investors are concerned about, you know, impact to demand from the higher prices, you know, what Huawei meant to you, you know, in prior years versus what could happen now. You know, there are just some pressures out there. So I'm curious, you know, if you can kind of talk to what you're seeing initially in iPhone demand and how you think it'll sort of move through, with the caveat that I understand, you know, things are pretty uncertain out there. And then I have a follow-up. Thank you.
Shannon, it's Tim. Welcome back. iPhone grew 10% in the Q4 timeframe to 42.6 billion. Customer demand was strong and better than we anticipated that it would be. And keep in mind that this is on top of a fiscal year of 21 that had iPhone revenue grow by 39%. And so it's a tough compare as well. And so we were happy with it. And in terms of the new products, the 14 and the 14 Pro and Pro Max, it's still very early. But since the beginning, we've been constrained on the 14 Pro and the 14 Pro Max. And we continue to be constrained today. And so we're working very hard to fulfill the demand. It's difficult to say what the mix will be until we can satisfy the demand, because we don't really, we're not able to determine the accurate mix until then. And so but we're working very hard to do that. We were really pleased with the broadness of the iPhone strength last quarter. We had 3 of the top 4 of smartphones in the US and the UK, the top 3 in urban China, the top 6 in Australia, 4 out of the top 5 in Germany, and the top 2 in Japan. And customer satisfaction for the iPhone remains very, very strong at 98%. And so we feel very good about how we performed in Q4, and certainly the start of this generation would suggest that we're going to be constrained for a little while on the 14 Pro and 14 Pro Max, but we're working very hard to try to remedy that.
Thank you. And then, Luca, can you talk a bit about gross margin puts and takes? Just, you know, how we should think about, I mean, 10 basis points of currency, you know, this coming quarter is I don't want to say unprecedented, but maybe it is. So I know you have hedges, but how do we think about it flowing through? And then what other, you know, components seem to be very favorable, but what else should we sort of throw into the mix as we look forward?
Yeah. Well, let me start with gross margin in Q4, and then I'll get to Q1. It was a September quarter record for the company. We did 42.3%, and that is in spite of, as you mentioned, very significant negative effects. For example, for Q4, on a sequential basis, FX was negative 70 basis points, and on a year-over-year basis, it was negative 170 basis points. Essentially, every currency around the world has weakened against the dollar. Now, we have guided Q1 to 42.5 to 43.5, in spite of the fact that we have, on a year-over-year basis, 330 basis points of negative exchange. Sequentially, it's 120 basis points unfavorable. So obviously, the strong dollar makes it difficult in a number of areas. Obviously, our pricing in emerging markets makes it difficult, and then the translation of that revenue back into dollars is affected. But on the positive side, we are seeing commodities behave fairly favorably for us. And so we believe we can offset the foreign exchange, the negative foreign exchange that we're seeing. And I think that the guidance that we provided reflects that. It takes into account, of course, FX, it takes into account some level of inflationary pressures, but I think the outcome is a good one.
Great. Thank you very much.
Thanks, Shannon. Can we have the next question, please?
Yes, sir. Our next question is coming from Eric Woodring with Morgan Stanley. Please go ahead, sir.
Hey guys, thanks very much for taking my questions. I have two as well. Maybe if we could just start, Luca, we saw quite the divergence in iPad and Mac performance this quarter. Both were relatively constrained from a supply perspective. So maybe can you just elaborate on some of the most impacted and important factors that contributed to kind of the divergence in performance, and whether, after we get through to the December quarter, those can reverse or normalize? And then I have a follow-up.
Yeah, Eric, it's Tim. I'll take your question. If you look at the Mac, it was the best quarter we've ever had in the history of the company. It was helped by the product launch of the MacBook Air with M2. It was helped that in the previous quarter, in the June quarter, if you remember, we lost output from the factory for a significant portion of the quarter. And so we had a backlog exiting our Q3 headed into Q4. We were able to satisfy all of that demand during Q4 and fill the channel for the Mac. And so that led to a incredible Mac quarter. If you look at iPad had sort of the opposite happening from a launch point of view. The comp from a year ago, we launched iPads in September. We launched iPads this year in October. The other point to remember is that the iPad Pro had just launched before the quarter started in the year ago quarter. So it was our first full quarter of iPad Pro. So it was an exceptionally strong iPad quarter a year ago, and the launches were really key to that performance. And so that's the reason iPad contracted during this quarter.
Okay, that's helpful. Thank you, Tim. Yeah. And then maybe Luca, if I were just to ask you, obviously Tejas at the beginning of the call talked about the 14-week quarter. Maybe can you just elaborate a little bit on how you think that 14-week quarter impacts different line items, whether it's products or certain segments within the product business or the services standalone, just where we should see that 14-week quarter provide a bit more of a tailwind versus maybe not have an impact at all. And that's it for me. Thanks.
Well, in general, we have a few more days in the quarter that they're gonna affect both our revenues and our costs. Not every week is equal, because obviously we have certain peaks during the course of the quarter. Think about Black Friday or the Christmas holiday. But in general, we're adding a few days of sale and an additional OpEx as well on the cost front. So that's what happens to us every approximately 6 years, as we need to align our weekly calendar to the fiscal calendar.
Super. Thanks, guys.
Thanks, Eric. Can we have the next question, please?
Yes, sir. The next question is coming from Ben Bollin, calling from Cleveland Research.
Good afternoon, everyone. Thank you for taking the question. Tim, I was hoping we could talk a little bit about services pieces within the portfolio. It looks like there's been some price adjustments as of late with respect to music, TV Plus, and the One Bundle. I'm curious how you think about balancing the consumer price versus your own costs and kind of the associated follow through. And then I have a follow-up.
Yeah, if you look at the price increase that you referenced, Ben, on Monday of this week, we announced a price increase on Apple Music and on Apple TV Plus, and then the corresponding Apple One that is the consolidated bundle that includes both of those. There's really two different situations here. With music, the cost of licensing increased, and so we're paying more for music. The good thing about that is the artist will also get more more money for their songs that are enjoyed on streaming, and so there's some bit of good news there, I suppose. And then on Apple TV Plus, if you look at when we first priced it, we only had a very few shows. We were at the beginning. We were very focused on originals only, and so we had 4 or 5 shows or so in the beginning, and priced it quite low. We now have a lot more content and are coming out on with more each and every month, and so we increased the price to represent the value of the service. And of course, Apple One is just the consolidation then of those 2 price changes.
Okay. And then another item, any preliminary thoughts around capital intensity into fiscal 23? Last couple of years, CapEx has been relatively stable. Can you talk to the big constituents of the CapEx figure, and maybe any moving pieces and how we could think about that into 23? Thank you.
Yes, Ben. So when we look at our CapEx, as you correctly said, I mean, we've been fairly stable, and I think our capital intensity is really very good. We have 3 major buckets in CapEx for the company. We have the certain dedicated tools for the manufacturing facilities. We have some spend around data centers, and we have spend around our office facilities around the world. We obviously monitor all of them. There is nothing unusual that we see for the next 12 months.
Okay, thanks, guys.
Thanks, Ben. Can we have the next question, please?
Thank you, sir. Our next question is coming from Kyle McNeely, calling from Jefferies. Please go ahead.
Hi, thanks very much. Just wanted to see if you could give us a sense for what drove the wearables result and the strength there this quarter. Was it from the maybe strong iPhone attach rates, or the new products that you have available that were announced this quarter, or maybe you're still getting some benefit from customers that are more willing to come into the store now and try things on versus the pandemic when that was kind of shut down?
Yeah, Kyle, it's Tim. If you look at wearables, we grew 10%, which we were very happy with. If you look at the individual pieces of that, Apple Watch was a contributor, and in particular, the new lineup was a contributor, including the Apple Watch Ultra and the Apple Watch Series 8 and the SE. The Ultra was supply constrained and continues to be supply constrained during this quarter thus far, and so we're working hard to satisfy the demand there and get those products to customers. We also announced and launched the AirPods Pro in September, and the reviews for the product have just been off the charts. In terms of the noise cancellation features and the sound quality, we're getting great reviews from there. In terms of what played the other way, the headwinds, obviously FX was a headwind that affected wearables, home and accessories, just like it affected the rest of our products and services. And we also had effect from the business in Russia, obviously, of the impact there. So that's sort of the pro and the con. The other thing that I should mention is that about 2/3 of the Apple Watches that we sold were to customers that had not previously owned an Apple Watch, and so we're still very much selling to new customers here, which is very, very good for the future.
Okay, great. Thanks. One more quick one on Mac. I wanted to see if you could quantify at all how much the channel fill and how much came from satisfying back orders from the June period for Mac. We're just trying to get a sense for where the baseline is. If there's any sense you can give us on that, what would it have grown if not for those factors? Anything you can give us would be great. Thanks.
Yeah, I would just say that all three of the reasons that I gave were key in achieving the 25%. The M2 MacBook Air, the launch of the new product, the satisfying the back orders from the previous quarter, and then filling the channel. All of those were key contributors.
Okay, fair enough. Thanks.
Thank you, Kyle. Can we have the next question, please?
Yes, sir. Next question is coming from Mr. Jim Suva, calling from Citigroup.
Thank you. And it's great to see that you talked about your suppliers going carbon neutral, a small statement I really took to heart. Thank you. My question is on the services. Could it possibly be impacted more by FX than product? Meaning the Jim Suva family has Apple One and TV Plus and all that, and we pay it typically on annual. But then when we go into the store to buy new watches and iPads, the price is adjusted more quickly. So could it be that services growth was impacted a little bit more by FX, and down the road we could see growth reaccelerate? Or am I just reading too much into the FX impact that could be different from services versus product? Thank you.
Hey, Jim, it's Luca. No, you're right. Obviously, the effects impact on our business depends on the geographic mix of the sales that we do, and so yeah, it can be, services and products can have slightly different effects on foreign exchange. And so if we look at our services business in constant currency, we would have grown double digits. And so we're very pleased with that. As I mentioned, there were some areas that we could see some softness. Digital advertising, of course, that part, and gaming on the App Store was affected. But we were very happy with what we saw in terms of the behavior of our customers, with the engagement with services. I mentioned a number of things during the prepared remarks. The fact that obviously that the install base is growing, that's a positive, and it's a great foundation for the future. We are seeing more transacting accounts and more paid accounts. They're both growing double digits. Paid accounts are growing faster than transacting accounts, so the penetration of paid accounts is increasing. We have a great subscription business, 900 million paid subs now on the platform, and growing very fast. We doubled in 3 years. So when we look at all those dynamics, that's the part that is really interesting to us, because we really believe that the engine for services growth is there, and foreign exchange is a temporary thing, but the fundamentals are very good.
Thank you, and congratulations to your teams.
Thanks, Jim. Can we have the next question, please?
The next question is coming from Amit Daryanani from Evercore. Please go ahead.
Thanks for taking my question. I have two as well. The first one really is around the iPhone trajectory. There's been a fair amount of focus in terms of what's going to happen to iPhone demand given the macro worries. It would be really helpful to understand, though, given the strength you're seeing, where do you think channel inventory is for iPhones today versus where it would be from a historical perspective? And do you see the channel getting to an optimal level by end of December quarter? Because naively right now, given the lead time data, it looks like your revenue trajectory on iPhones is more driven by the supply you have versus demand. So any color on the channel inventory would be helpful.
Yeah, if you look at where we ended, Amit, in the September quarter, we exited below our target inventory range on iPhone. And that in and of itself is not too unusual in the quarter. We start the ramp and demand is robust and so forth. And so I wouldn't call it that abnormal from the past.
Got it. And then, I guess, Tim, you folks have been talking about digital advertising a fair bit over the last few quarters, I think. Is there any metrics, any vectors you can talk about kind of to give us a sense of how big this business is or what vectors are you focused on? And really, if you could talk about, do you think Apple can build an advertising business at scale without sacrificing consumer privacy?
Well, our first and foremost, we focus on privacy, and so we would not do anything that stepped away from that. We feel that privacy is a basic fundamental human right, and so that's sort of the lens that we look at it under. Our specific advertising business is not large, and relative to others and so forth. But we don't release the exact numbers on it, but it's clearly not large.
Thanks, Amit. Can we have the next question, please?
Yes, sir. We'll now move on to Mr. Harsh Kumar calling from Piper Sandler. Please go ahead.
Yeah, hey, thanks, guys. First of all, fellows, congratulations on stellar performance. There's a lot of large cap companies that are getting whipped around, so we appreciate the steady cadence here. Tim, I wanted to ask you about inflation pressures and labor problems here in the US and globally, and maybe talk about what steps can Apple take to mitigate those. And maybe look on that end, FX is becoming a pretty significant headwind. I was curious what, if at all, if there's anything that can be done to mitigate that.
I'll let Luca talk about FX. And in terms of the people piece, we're focused on taking care of our teams and offering them the best benefits and best compensation so that we can empower them to do the best work of their lives. And so that's what we're focused on in terms of our teams. In terms of inflation, there's clearly wage inflation. There's inflation related to logistics as well. If you compare it to pre-pandemic kind of levels, though that has not returned to pre-pandemic levels by any means. And there's certain silicon components that have inflationary pressure as well. And so that's not a all-inclusive list of where we see it, but it gives you some ingredients of where we see inflation pressure. And we've obviously taken that into consideration in the gross margin guidance that Luca gave earlier in the call.
Yeah, and on foreign exchange, you're right. I mean, it's obviously a very significant factor that is affecting our results, both revenue and gross margin. What do we do about a situation like this one where we have very strong dollar? Of course, we hedge our exposures. We try to hedge them in as many places as possible around the world. For example, I think we've been probably the first company that started hedging our exposure in China several years ago. There may be a few currencies, small ones, where we don't hedge because the cost is prohibitive or the market is not there. But in general, we tend to hedge because it gives us, significant level of margin stability. Obviously, over time, that protection reduces because the hedges roll over and we need to buy new contracts. But that's the primary tool that we use to offset some of the FX pressure. Of course, when we launch new products in particular, we look at the FX situation, and in some cases, for example, customers in international markets they saw some price increases when we launched the new products, which is not something that, for example, US customers have seen. And that's unfortunately the situation that we're in right now with the strong dollar. And so that's the way we try to deal with that. I have to say that one of the things that we've really appreciated the most during the quarter was the fact that in spite of this very strong dollar and the difficult FX environment, we have seen very strong performance in many international markets, particularly some very large emerging markets where even in reported currency, so in US dollars, we've seen very strong double-digit growth in places like India, Indonesia, Mexico, Vietnam, many places where we've done incredibly well. And obviously, in local currency, those growth rates are even higher. It's important for us to look at how these markets perform in local currency, because it really gives us a good sense for the customer response to our products, the engagement with our ecosystem, and in general, the strength of the brand. And I have to say, in that respect, we feel very, very good about the progress that we're making in a lot of markets around the world.
Thanks, Tim and Luca. I had a follow-up. Luca, in your prepared remarks for the guidance, you mentioned that for the December quarter, you expect the performance to decelerate relative to September. So September was a year-over-year about, call it 8%. Should I think that 8% number will go down on a year-over-year basis as we look at December? Maybe you could provide some color of what you're thinking. And are we looking at a positive number, or are we thinking maybe that the growth rate will be negative on a year-over-year basis?
Well, what we said is that we're going to be decelerating from September. So September was 8%, so it's going to be a lower percentage than 8%. We're not providing guidance for the reasons that we've explained. There's a lot of uncertainty there. And so we'll see how the quarter progresses. Keep in mind the 10 points of exchange. Certainly, in normal times, we will be talking about very different numbers, but that's where we are right now.
Thank you, guys.
Thanks, Harsh. Can we have the next question, please?
Yes, sir. Next question is coming from Krish Sankar, calling from Cowen and Company. Please go ahead.
Yeah, hi. Thanks for taking my question. I have two of them. First one, either for Tim or Luca, on cash and capital allocation. Given the correction in valuation for some of the private and public companies, does it change your thought process on the timeline to get to cash neutral? In other words, would you be more aggressive with acquisitions, or do you think holding on to more cash due to interest income becomes more attractive versus your prior investment goals? And then I had a quick follow-up.
Yeah, this is Tim. In terms of acquisitions, we averaged about one per month, I believe, across fiscal year 22. And so we're constantly looking in the market and at what's out there and what things would be synergistic and which things would provide either intellectual property or talent, or preferably both, that we would need. And so we're constantly looking at acquisitions of all sizes.
In terms of cash deployment, obviously we like to look at the capital return program over the long arc of time, and we have done, since the beginning of the program, we've done over $550 billion of buyback at an average repurchase price of $47. So the program has been incredibly successful. We are still in a position where we have net cash, and we've said all along we want to get to cash neutral at some point. Our cash generation has been very, very strong over the years, particularly last year. I think I mentioned in the prepared remarks, we did $111 billion of free cash flow. That's up 20% year over year. And so we will put that capital to use for investors.
Got it. Very helpful, Tim and Luca. And then a quick follow-up for Luca on the December guidance. Thanks for his color on that. I'm just kind of curious, the extra week in the quarter, is that not helping offset some of the FX? Or in other words, the 10 percentage point negative impact from FX would be much higher if it was a 13-week quarter?
No, I wouldn't say that, because those are percentages. So yeah, no, the 10 points wouldn't be different. 13 or 14 weeks would be the same.
Got it. Thanks a lot, Luca.
Thank you, Krish. A replay of today's call will be available for 2 weeks on Apple Podcasts, as a webcast on apple.com/investor, and via telephone. The number for the telephone replay is 866-583-1035. Please enter confirmation code 7086300, followed by the pound sign. These replays will be available by approximately 5 p.m. Pacific time today. Members of the press with additional questions can contact Josh Rosenstock at 408-862-1142. Financial analysts can contact me with additional questions at 669-227-2402. Thank you again for joining us.
All right, team. So that is it for the Apple earnings call. We got a crypto show starting right now, guys. So don't go anywhere. We're gonna start our crypto show right now. Before we do that, check out Top Steps Funded Account Program. It's the easiest way to get around the PDT rule. You can day trade, you can short in the futures market with no PDT restrictions in the futures market. Top Step funds you. They're the most legit one in the world. They fund thousands, pay out millions a year. Regulated by the Chicago Mercantile Exchange.
Can't hear you, man.
You can check out the link right here in chat. And I'll see you guys later. Have a good day, guys. Good luck. Love you all. And yeah, we'll see you guys later. Good luck, team.